Good morning, good morning, good morning, good morning, guys. Could you just confirm that you guys can hear me a-okay? I have Krisha with me over here as well. Krisha, just say quick hi so they can do a quick audio check. And yeah. So Krisha is all happy today, and I'm kind of a bit all over the place, guys. I'm just putting on some trades just before we get on to today's stream, because today's stream may run a little bit longer than usual. So I just want to like quickly do a couple of things. So just don't mind me. And Krisha, I actually don't have any pants. So,
Oh.
could you just,
I just noticed.
yeah, I mean, just,
Do you want me to
yeah,
grab you a pair of pants?
Yeah,
Okay,
yeah.
I'll be back, guys. I'm gonna do my job.
Also, get me my thingy. You know what thingy? Yeah. she's like, what thingy? I'm gonna spell it out for you. Yeah, exactly. Oh, okay. She already had it for me. Okay, perfect. Okay. Gotta have the security, guys. Gotta have your security in place. Okay. Do you guys? Okay. So I've decentralized my trade, so I'm gonna have to use Krisha's laptop as well today. Should I just get on? Can you guys hear the music? Is everything a-okay? Mark, I'm going to need a little bit extra help from you, man. So if you do notice anything, just go ahead and PM me on Discord. I'll try to keep an eye on my Discord as well.
Here you
Oh, thank you. Alright, guys, I'm putting on my pants. Putting on my pants. How's my hair, Kusha? Guys, my hair up or down today? Up or down? Since Bitcoin's down, should the hair go down?
Let it wild and free. I gave this man so much time to do his hair and makeup, but no.
I was, I was actually working today.
High maintenance men. High maintenance.
Kisha,
Guys,
literally
throw some hearts.
I'm literally managing the
For-
family's fortune today.
Throw some hearts
I'm
for
actually
Sean.
managing the family's fortune, and she's like, "I gave you time to do your hair." Really, I don't think that's what we're going to be worried about 4 years from
Hair
now.
and makeup.
I can't. We shouldn't even be doing the stream today. Honestly.
No, this is the best time to be streaming.
Yeah, but. Okay, is this is this fine? Should I just get on?
Yeah.
I look like an idiot. Could you fix this for me?
Okay.
This side. Is that good? That's good enough.
It's good enough.
Any echo today, guys? Starting.
We have. All right, guys, let's go ahead and smash that like
Jesus
button.
Christ, man.
Get this party started. Sean is trying to look pretty for you guys. Come on. Give the man some hearts. Throw him a heart.
I'm trying
Throw
to
him a
look
kiss.
presentable. Guys, today's thing is going to be all over the place. Don't expect an organized stream at all. Even the interview. We have an interview, by the way, coming in today with Jason Casper. All the questions we have planned is going to get thrown out the window.
He's a cool guy. I think you guys are going to like him.
He's going to have fun. He's going to have fun. All right, I'm just going to jump into the thingy, Krisha. We're going to do the mango intro. And then the good morning, everyone. I have my pants on, and my name is Sean Dexter, and her name is Krisha. We welcome you to this beautiful Red Monday to the Mango Grove. The only community who's here for you day in and day out, 10 times harder during the bear markets, during the dump. We've been here for every single bear market since 2017.
God, I love these people. Priest of Crypto says, right to the charts.
Smash the
Formalities
goddamn
not
likes.
needed.
Man, Kusha, this is not. They can't see nothing. There's like no app dashboard. They can't see the dashboard. They can't see anything. What's supposed to be on the right hand side? The charts are not here either.
All right.
Nothing is here.
I think we switched our windows up.
The charts are here.
Because I'm so used to leading the live streams now. I mean, I did it for a week, so everything's like on my tab. Sean and I, as some of you guys know, we trade, we have different trading view accounts as well, right?
Is the music running, Kusha? Did you guys hear the music? Jesus. What a mess. Today's a goddamn mess.
There we go.
I need your laptop for a quick sec.
Go ahead.
Just roll back.
All right, we can talk.
Okay. You guys talk. I'm just gonna quickly put on just one last trade. Just one trade, and we should be good.
I can't see the chat though. I need to see what they're saying.
Let me.
There we go.
Okay, there we go.
Wow, I'm pretending like I can see everything from such a long distance.
You guys
I
can't see
actually
my
wear
TV,
glasses, guys.
Boom. Ouch.
The only thing, Dread Mining says, the only thing to ask today is why don't I have more margin in my shorts? Are you currently in a short? Dread Mining. I'm only here for the music. You actually like the music? The new instrumental music we've been playing? Easy Shota, forget the music. I'd rather hear the sweet sound of waves crashing. You and I are on the same page there. Yes, ma'am. Good stuff, man. Dread Mining. Or is it on Bitcoin, or are you short? Are you short on some of the altcoins? There is no music. I know. Are we still waiting on the music? As you can see, he's serious about the... Oh no. There we go. Yeah, Mango has the best music for late night crypto talk. Exactamundo. Okay, wait, let me go and look for the music, guys. Give me a second. Give me a second. We're good here. All right. Well, that's gonna bugger it up. Okay, Sean's gonna have to handle this one, unfortunately.
Well, what's wrong?
We have it on different windows.
Okay, that's fine. Dude, nobody cares about the music anyways.
People say that they're enjoying the music. My Bitcoin short has by accidentally closed this morning by some random take profit I forgot to set.
Yeah, we talk about those kind of... You forgot to set.
You wait,
What do you mean?
Yeah, so how did it close out?
You must have set your
forgot
to like a reduce only or something like
that. Oh. Yeah, you got to be so careful with
that's exactly
with those kind of
right now.
orders, because you set them and then you forget you set them, right? Something that's supposed to trigger later on, and then it triggers and it ruins your entire position. It's positive that we started dumping on Monday. I think reversal is coming very soon. I agree, actually, Christian. I have like this forecasting sort of data method that I use, at least for the cycle bottoms. And if things work out and if it goes as per the forecast, then I think the low, okay, and I'm not saying the trend begins, but I'm saying the low, I think we hit the low by mid-July or mid-July to early August. I think the low comes in then. And that's when I think the last quarter of 2022, this year, the last quarter, I think it's going to be a green quarter. I think we rally. I think that's when the actual bull trend begins. What is that true? Can someone confirm? Teal says Cardi B just tweeted about recession starting. That's bullish.
Who?
Can someone just confirm that?
Who?
Did she really? Okay, when everyone is screaming recession, just understand that we're likely in the tail end. We just broke 24K.
Yeah, 23K. That's kind of why I was smiling at the moment. Okay, cool. Okay, perfect. Okay.
I have fresh targets for you guys. I think 24K target was pretty key. The next one, well, we'll talk about it. Let Mr. Mango wrap up.
Could you switch to Sol real quick? Oh, fuck. Okay, perfect. Yeah, my new Sol take profit just hit, but I still have a good position riding on this one. I don't know. I'm betting on some kind of panic move, but at the same time, I don't want to get too greedy. So, and again, I'm not going to be here for the 12-hour candle close, or rather, may not have time at the end of the stream. I may not be fresh. We may not have time at the end of the stream. I've made that mistake before, guys, where I've essentially I'm looking at the mic and talking, where I've told myself, oh, you know what? I'm going to have time at the 1:30 candle close perfectly. I'm going to be in the perfect state of mind to put on my trades, close my trades. But by the end of the stream, I'm so freaking exhausted. I make all my mistakes. So I'd rather make you guys wait, manage my trades right now, and deal with things later. I don't have to deal with things later. Okay, cool. You good, Krisha?
Yeah, I'm actually just looking at this whole thing of Cardi B talking about recession, and it's so funny when you see. Okay, those are signals of frothiness in the market. Frothiness.
No, my mic is fine.
On like a certain move. When you saw the celebrities actually, talking about crypto, talking about NFTs, and that was all like at the top, right? That's usually a sign of frothiness. It was just what happened this time. We were looking at the entire cycle, and if you notice Bitcoin's entire cycle, at least this past bull run, it was pretty lackluster, right? It was pretty freaking lackluster. So, and that's the thing. When it's a crowded trade, understand that we're likely reaching an apex of sorts. So be very, very careful there. Priest of Crypto says, can't hear. All right, Sean, let's go. Go ahead, test your mic.
How's my mic now? Is it good now, man? My mic is not fine. Because I was sitting really far away from it, but maybe now it's better. If it's not, I'll go ahead and fix it. Okay. Yeah, I was far away, man. I was just managing some trades. Apologies for that.
Okay, sweet. Thank you, guys. Thanks for the confirmation.
Okay, so now, remember, guys, this is the key level. This is exactly the level. Oh, I'm looking at Sol. Okay, I want to talk to you guys about this chart as well. I'm going to be coming back to this very, very soon. But we do also want to be looking at BTC USD, having fun with the lower time frames. Yeah, so yeah, we've penetrated the zone. Look at that. Closed underneath, retested, shot back above to give us a nice hedge. Okay, this shoot above over here is really, really important, because as soon as we close these candles underneath over here, right, I needed to put on some short positions to essentially hedge against my puts at around the 25K. Because remember,
you need to switch to your chart.
They can see.
They're better.
There you go. So essentially this morning, guys, I want you guys to think about the key level that we were looking for Bitcoin to hold on the weekly. What was the key level, Krisha?
Well, for me, it was my red box territory.
The red box territory. For me, my red box.
The 29K region, 29K which we broke
region.
Pretty swiftly.
Very, very simple, right? I've been posting this in regards to Ethereum. It's going to be the same thing, guys. The weekly 200 exponential moving average, right? The bounce, hoping for it to bounce. Well, we close underneath it. That was like the big signal that, you know what, this is likely going to be coming down to the weekly 200. This idea we've been talking about for a while. As long as we were holding above it, we could have that hope towards the upper region, towards 36K, 37K, at which point I would be looking for rejection again. But we didn't even get the bounce up there, man. In fact, this, Krisha, may actually be better than the scenario if we bounce to 37K and then broke down. And I talked to you about that too, right?
Yeah.
I said if we rip the bandage off right now, it's going to be a lot better than if we bounce to 37K and then came down. So I think we all feel the pain right now, right? Because crypto is going down, but it's going to be better long term. So now I'm looking towards 22,000 period. It's as simple as that. Okay, 22,000. So now remember, guys, though, I have puts at 25k region, right? So what did I do? As soon as I woke up, well, I have to hedge those puts. Usually I wouldn't. I would wait for the weekly to actually close, but what ends up happening is market panic in these kind of scenarios increases the implied volatility, and then you're required to put in more and more and more margin. And I don't keep that much margin either on my exchanges because of counterparty risk, and we don't know whether there's going to be a clog in the network to actually send the margin in, right? So
yeah, that's a big thing.
So you have to be very, very careful. You have to like start considering those kind of scenarios that, wait a minute, with things that's going on with Celsius, things that's going on with, I can't be Tron as well. TRX is Tron.
Yeah.
USDNN, whatever they're using, USDD. There's so much like market FUD and panic that's all going to get pushed out right now. Okay, we've been there before. Been in this very, very similar situation. That's why I woke up this morning and man, all this is going on. I'm like, man, this is so reminiscent of 2018. The fields during the capitulation. And I'm like, it took me back to times where, well, it's just gonna come out and say it, man. It was piss poor. Grinding with the trades, because trading the bear market during the zone was like, up and down, and then the big win came, and then weeks later another big win. So it just took me back to this period, and I was like, man, as bad as we feel things are over here, things were way worse, and it was good because it was bad, right? And again, the pain is going to make us stronger, guys. This is, you guys are all going to look back at this period and you guys are going to be laughing and smiling, and we're going to be together over here again at Mango 4 years, 5 years from now, and thinking about these times over here. And again, we were positioned, we were well positioned for this entire move to be able to take advantage of all of this opportunity that's coming in right now. So yeah, I have a lot of things to talk about today, man. A lot. And we have Jason Casper coming on today as well later. So stay tuned for that, guys. That's going to be a fun conversation. Everything that we plan to talk about is likely going to get thrown out the window because we're going to be talking about the charts likely. It's going to be crazy times, man. And yeah, Kusha, I put this together for you guys to just show you guys how I think things may pan out. You guys know what I mean. Hey, Michael Jones, thank you for the super chat. Let's see what he says. I can't see it. Can you read that?
He says, good job, guys. Would send more, but holding on to my cash for a bottom.
Attaboy.
Wow.
Attaboy. Save for Bitcoin, man.
There's something that Sean mentioned. Now, this is specifically for you guys that want to actually catch Bitcoin at a certain sort of price level. Say if it's $22,000, if it's $18,000, well, whatever it is. There's one thing you guys need to consider. Now, this has happened to me in the past. That's why I figured I'd just put it out there. The thing is that when you're trying to get in your bids, and if it's like a crazy, crazy moment of volatility in the market, there's a good chance that the exchange might be overloaded, essentially preventing you guys to even log in. So even a simple function like logging into your account is not going to be possible because that's how overloaded the system is going to be. All right. So if you want to catch a bid at a certain level, especially for those of you who are coming in as long-term investors or whatever it is, you want to make sure that your bid is set before we get that moment of volatility that will sort of ruin your plans.
Exactly.
Okay. So just account for that. This is coming through like experience. This is coming from experience, and this has happened to me way, way too many times, and I think I've learned my lesson.
Krisha, did we send out a notification to people about the live stream?
Here, let me do this.
Yeah. I also can't find a link to the live stream, unfortunately.
I got it.
You got it? Okay. Alrighty, so guys, what's the play, right? Everybody's probably asking me, what's the play? Okay, what's the high level play? Here's what I'm looking at. Okay, yeah, perfect. So Bitcoin dominance just broke out of a massive range. Okay, Bitcoin dominance. Are you guys looking at my chart? Okay, Bitcoin dominance just broke out of a massive range. You guys are gonna, those of you who have not gotten out of your alts when you were supposed to, remember, a month ago, literally a month ago, Krisha, May 15th, May 12th or so, I said the Bitcoin dominance saga is about to begin. Okay, I said that. Okay, very few listened, right? Now, if you guys haven't gotten out of your altcoins yet, it might be a bit painful to do so at the moment, especially against Bitcoin, right? Because you missed out on this entire Bitcoin run, and altcoins are looking very cheap against Bitcoin. So now a lot of people are going to start panicking. There might be an exit, and here's the thing: this trend line over here that you're looking at, or many people are probably looking at, we could retest it. We could retest it because of the Tenkin and the Kijun, right? It's coming there to cross bullish. Now, if we do retest it, that's likely going to be around the time that two events are going to happen. Okay, Bitcoin bottoming out, altcoins bottoming out, and altcoins seeing a massive rally, a massive bounce. I'm talking about bounces in the range of around 50%, right? Anywhere between 45% to 55%. It's going to get a lot of people excited again. But those bounces are going to be opportunities to sell into Bitcoin. Okay, people are going to forget about Bitcoin because Bitcoin has had its time. Like for the past few weeks now, it's been going against all coins. People are going to forget about Bitcoin, going to rush into alts, and then Bitcoin is likely going to take off. And this edge-to-edge trade opportunity in the cloud is going to play out, in my opinion. We're going to see 56% Bitcoin dominance. But it's going to happen when people forget about Bitcoin again, because they're also going to see such crazy bounces, but they're going to get sold into. So keep an eye out for that. Bitcoin at 23K now, Kisha. Nice.
We're getting the bid sooner rather than later.
It's all happening right now. The bandage is getting ripped off right now.
Someone asked a question here. I want to address it. Tabraze. Hi, what's going on with Bitcoin and Ethereum? The market cycle is playing out pretty much. We are, prices reacting now. And it's not just Bitcoin and Ethereum, right? These are just the two charts that maybe perhaps you are looking at. But if you look across the board right now, there's weakness across the board, not just with crypto, with the traditional as well. So, and there's so much going on, even in terms of, Sean, the macro landscape of things, bonds, holy mother of goodness.
Yeah, so the 2-year actually did flip the 10-year, at least temporarily this morning. Now the 10-year is again, it's kind of pretty much flat though at the same time though, right? So like the credit markets are also breaking, guys. So there's something going on right now in the markets.
Yeah, something is breaking right now. So we're seeing everything sort of unfold.
So and we're looking at HYG over here, Krisha. I just want to quickly talk about this. HYG is essentially an ETF for high yield corporate bonds, okay? And high yield corporate bonds are essentially corporations that need funding, okay? And they issue these bonds at higher interest rates. Now, as this goes lower and lower, it essentially means that those corporations are going to need to pay out more and more interest to be able to get their funding. And a lot of these guys live literally paycheck to paycheck. What I mean by that is that they need to roll over their bonds, they need to refinance their bonds to be able to make payroll, to be able to pay their employees, right, to pay operation costs, etc. And if they can't afford to do that because of the interest rates, the corporations need to start laying people off, and that's how things just break apart or fall apart, and it ends up being a contagion. When the credit markets break, that's when the Fed steps in, guys, okay? Especially because remember what I explained to you guys last year. The Fed has a dual mandate. Now everyone's talking about these things, but we were talking about 1 year ago, we were talking about the 10-year and the 30-year and the 2-year. Mango is well ahead of the market, okay? So those of you who are new over here and just finding Mango, hit the subscribe, hit the like button, because we were well ahead of the game, especially when pertaining to crypto. Now, to go back to what I was talking about, the Fed has a dual mandate, okay, to keep employment up, to keep inflation down. And they were in a pickle because inflation went up, crazily up, and if they tried to control that, they were always going to put pressure on employment, right? And now you're beginning to start seeing leading indicators of employment beginning to get a hit. Okay, when layoffs start happening, it's usually because of, well, the credit market's failing. So really, guys, there's opportunity in the market right now. Don't try not to fixate only on what you're looking at. Look at the bigger picture and understand, is this a Bitcoin only event? Is this a Ethereum only event, right? Weakness will get punished in the markets, definitely. But if you are long-term bullish on whatever you're looking at and you have a strong fundamental view, because you may know something that other people don't and they are panicking, this might be the opportunity. Whether it be Cardano for you guys, whether it be Ethereum for you guys, I don't have any fundamental edge on those coins, right? So I don't really try to go balls out on my accumulation on those coins when I see opportunity. Do you guys see opportunity there, right? Keep a cool head. Be mango, okay? Don't front run anything. We've talked to you guys about all the levels way ahead of time. Way ahead of time, okay? So remember, if this, then that. Any questions? Any questions, specific questions? Kusha, keep an eye on the chat for me, because like I said,
sir,
all over the place today. Look up MBPS, mortgage-backed securities going no bid this past Friday. Probably why there's holy dude, no bid in the MBPS markets is actually a signal for the Fed to panic. But we had another panic already, or rather, you'd think that they'd panic with the CPI coming out at 8.7, I think, right, higher than expected. So it's a tough situation, man. This is what Luke Gromen has been talking about for the longest time. He's been literally talking about this. The Fed is literally going to have to ride two horses with one butt. So the current stream's bitrate is higher than the recommended bitrate. What? Isn't that supposed to be a good thing? Thank you, Mark. On-chain data do you mean data analysis? I am not an expert on on-chain analysis, man, so I don't like to talk about it. We can bring on guests over here to talk to you guys about it, though. I do look at on-chain myself, but I'm not an expert, and I don't like talking about things that I don't have an expertise on. Okay, so I have something for you guys. Okay, I've drawn out. I have a chart over here for you, Kusha, that I've probably not shown you either. Okay, so we're using a special combination of EMAs over here. Let's see if you guys can figure out what EMAs these are. They seem really, really overfitted, but don't worry, they do have some logic behind them. And we're essentially looking at all the Bitcoin halvings from 2012, 2016, 2020, 2024, okay? And I've noticed a trend of us actually coming down around, if you take the entire market cycle, we retrace to around, like, let's say anywhere between 25% to 30%, okay? Accumulate along these levels over here, right? The yellow EMA over here and the purple EMA between those two. Remember, this is the monthly. We're not looking at the weekly, guys. We're looking at the monthly, okay? Come down around 25% to 30%. We retrace that much of the move. I'm talking about from low to high, okay? And then we start accumulating again, leading into the halving, and then we see a dump into the halving. Okay, we see a run into the halving, a dump into the halving, and then a breakdown. Okay, look at that. Accumulation, run into the halving, a dump into the halving, and then a massive run. Right? Let's undo that. Okay, and we saw the same thing over here. A run into the halving, a dump into the halving, and a big run. Could we be seeing now what we need to be doing over here, guys, as Mongolians, we need to be thinking about the next big trade. Remember, the reason we did so well with a very stress-free mindset without going degen on all coins was because we were looking at all these big possibilities for Bitcoin all the way over here, right? In fact, we started over here. We were planning over here. So now we start planning again. So what is the possible scenarios? I think that we put in an accumulation kind of pattern over here over months. This is the monthly. guys, over months. I say we do something like this, okay? Either higher lows or probably maybe even lower lows. We could put a falling channel leading into the curve of the EMAs over here, okay? Accumulate and then run into the halving. And then now we have key levels, okay? We have key levels. I have one level for you guys over here. Oh, I already have it marked out, but you guys probably don't see it. Let me draw it out for you guys with a trend line, okay? This level right over here at 37,000, 38,000. We've been talking about it for a while, okay? I think that level is likely going to line up with the 6K level that we had, Kushan, 2017.
Yeah.
Right, so accumulation underneath.
Right.
Okay. Rally into that level. Now it begs to be seen what we do at that level. Okay, if we break that level, we're likely going all the way up to like around 55,000, 56,000, somewhere around this region. Okay. And then we'll see again what could Bitcoin do over here. But we could do something like this. And then dump into halving, right? Maybe something like this.
Yeah, I don't think it's going to be... So, okay, I was looking at this. Sean sort of showed it to me pretty briefly, and I thought it was really interesting, guys, the halving. So the vertical lines on Sean's chart are, well, the dates of the halving that took place. Now, as you can see, we have one coming up in March 2024. Echo. Okay, how about now?
Just keep
right.
it down. Don't speak up.
Okay, so... Okay, right. So we have the halving coming up, but the signature that I'm noticing on this chart is more so that, okay, price rallies about 1 year before the halving, right? We rally. However, we never, on that rally, we don't ever break that previous all-time high. Now, in our case, in this case, it's 60K was the all-time high, right? So we rally, but never to break the all-time high. And then the dump halving comes in basically underneath that all-time high as well. So I don't think that we rallied that high up, Sean. I think the rally is going to be lower than 60K, then dump, and then likely going to...
So you're saying leading into the halving. So this is what Kusha's saying, guys. By the way, can you guys hear me fine? Because I had to reduce my mic to be able to get Kusha's echo out of the way. But this is what Kusha's saying. She's saying that leading into each of the halvings, as you guys can see over here, leading into each of the halvings, we have not gone up to all-time high. Right? So this analysis would be wrong in that case. If history repeats, it would be more so something like...
Okay, you're gonna have to turn your mic back up.
So I think we should do this. I think we should do this. Turn off your mic.
All right, guys, we're going into one mic.
Alrighty, how's this, guys? How's this? I think this is going to be a lot better. I think this 2 mic setup is BS. Okay, when she's close to me, guys, I can't resist. Yeah, is this better? There we go. Kusha insisted on this 2 mic setup. I was like, nah, we won.
I thought it would be cool having the 2 mics. Perhaps we're moving soon, so hopefully we can do the whole 2 mic setup in a better sort of way, so that we don't have this issue.
Okay. Let's get back to the situation on hand.
Okay. All right, let's do this.
So where do you think we come up to then? I think around 52K-ish, right? And then, okay, maybe we reject then. Maybe we don't see a break of 37K. Maybe we do this. This is what people don't want to see though, Kusha. Right? Then leading into
Yeah, I think that's a lot more plausible, quite honestly. I think what people are sort of missing out is we could perhaps, so I am expecting a rally. So the way I'm looking at this entire sort of bear market consolidation, if we have to go through historic price action, if we have to go through the signatures of things, I think that this sort of bear market phase is probably going to last around 3 to 4 months. I'm actually expecting the next trend to begin by the end of, the last quarter of this year, as I'd mentioned earlier in the stream. If we do start rallying, what people are sort of missing out on is a possible consolidation. Now, take for instance, Sean is currently looking at a monthly chart, guys, a monthly. Okay, now I want you guys to pay attention on this cycle right here. What is this? Can we delete this?
Yeah, go for it.
Cool. All right, so I want you guys to look at the cycle of basically the bear market of 2015, right? We put in the bottom right here, 2015. Price started rallying now. This was about 1 year right before, well, the next halving that took place in 2016. I want you to notice this dump, or sorry, this region right here. I'm going to just zoom in just a bit so you guys can see it. Sean doesn't like me zooming in too much. He's like, Krisha, make sure they can see your chart properly. So anyways, I want you guys to take notice of this. Let me just draw a circle. I'm going to take this circle. I'm going to circle it right here. Okay, cool. This region right here. This was 1, 2, 3, 4, 5. 5 months of consolidation. This is a monthly chart, guys. 5 months of just pure consolidation. That just moved in one freaking horizontal line. It was just like zigzag. 5 months of consolidation. So that is something that is plausible. That is something that we can see right before the next rally to the halving. So that is one plausible scenario that you need to account for. But as far as the bear market is concerned, I think, honestly, Sean, I think that we put in the low either next month or first week of August. So that's the lowest point.
Yeah, so, but how low could we go is the big question, right? That's the big question. And at the moment, Krisha, we've taken out last month's low, right? So if you guys look at, by the way, the chart we're looking at the moment was BLX, the one prior to this one. So it's not updated yet. If you look at the monthly now, through this perspective, we've taken out last month's low. So we have yet to put in a monthly low. Okay, after putting all of these high lows, as soon as we took out this low, that essentially initiated the downtrend on the monthly. And remember, over here at Mango, as soon as we lost the monthly 21 EMA, remember, there was no excuses over here at Mango, no excuses. Someone asked that morning that we close underneath the monthly 21. Someone asked, hey, we close slightly underneath the monthly dynamic, guys. Does it count? Can you consider this a defense? No, it's not a defense. Your indicators exist for you to remain objective. Okay, you don't get to make excuses. You don't get to say, yeah, I can give some room. No, that defeats the point of indicators. Indicators, the entire point of an indicator is to remain objective, a line in the sand. And we slightly close underneath the dynamic. And someone asked me, what does this mean? I'm like, guys, I've told you the story about how we closed underneath the weekly 10K 21 EMA back in 2019 ever so slightly. It did not matter to me. I sold into it, and what happened right after? The COVID dump, right? The COVID dump happened a few weeks, 2020. COVID dump happened. I told you guys that story so many times, and this was the same story over here on the monthly. Closed underneath, rallied to give you guys the perfect sell-off, and boom, 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 right? Let's go back to the story. Should we tell that story again? The COVID story?
Let's go.
Okay, let's go. We'll turn on our Ichimoku, turn on the weekly, and I'll tell you guys what happened here, okay? I was trading this entire region, guys. Turn on 21 EMA. I was trading this entire region over here perfectly. Like, I nailed it. We got the entire rally all the way to around 10,400-ish, all the way to the top of the cloud. We took our profits at the top of the cloud. And then the trade idea was this, okay? So we traded from here, from this 4-day structure, to the top. Okay, and I took my profits and I'm like, okay, guys, I think we're going to do this. Okay, I think we're going to come down to this juncture here, close under, test the 21 EMA, Kijun, Tenkin. Okay, listen, guys, because listen to the story, because you guys will be able to apply this in the future. You guys were able to apply it over here for Bitcoin. So those of you who didn't, listen one more time. Okay, one more time. I had a thesis. Okay, I was on a roll. I nailed this entire run. I even called the test. So I took profits and I was ready to trade this towards the upside. Now, let's go ahead and remove all of the drawings. Let's remove the Ichimoku cloud as well. Okay. Okay. So, oh, damn it. Okay. So I call the test of the Tenkin Kijun 21 EMA juncture. And I said, I'm going to buy that region. I'm going to buy that entire juncture. And I'm going to hold it only if the weekly closes above the weekly 21 EMA. I wanted it essentially to close above the entire juncture. That's it. If it didn't, I was out of the trade. I was out of the trade. Now, we came and tested the level. We almost defended it. Okay, so I built my position in. I built my position in the entire juncture. I was really excited. I'm like, man, everything is going perfectly. I was really excited, right? Because I had a big win over here, caught a nice big trend. And then when it came to that weekly, right, guys, we closed above the Tenkin, but we closed underneath the 21 EMA and the Kijun. So we didn't clear the entire juncture. Now, I could have very easily made an excuse and said, no, you know what, that's enough. That's enough. You know, I'm going to hold it. Okay? But I said, no, Sean, you've paid the price before by not being disciplined. So stick to your discipline no matter what happens. You know what happened the entire week after? I was selling while price was going up. Okay? And there were people PMing me saying, Sean, are you sure, man, you're getting out of your position? Are you sure? Because price is going your way. Price rallied all the way to 9,200. And I was selling into strength. The entire week. Go and drill into this candle, guys. You know when this candle dumped? The last 12 hours of the week.
No, it was like the last 2 hours. It was something ridiculous. It was something ridiculous.
This
and it just
candle was green for the entire week and I was selling into it even though I was long. Okay? But I was wrong on my trade idea. I was wrong on my thesis. So I sold into this wick, into this entire wick that you guys are seeing here. And the next week, COVID. I've never, like, this will stick in my heart forever. 2 trades. This one over here where I nailed it and got it right for being disciplined, and this one over here where I was undisciplined and I lost out on an opportunity. Same shit, 2 different directions. I mean, same direction actually, but 2 different trade ideas, right? So stick to your rules, no excuses. Now, going back to Bitcoin monthly, same shit over here, guys. Always stick to your rules. Look at what happened. We close underneath the 21 EMA ever so slightly. Ever so slightly. That's enough. That's enough. If that wasn't enough, we close underneath the dynamic too. That's enough. Retested, boom. Make sense, guys?
discipline is gonna pay, guys, with your bids. Discipline is gonna pay. That is, I feel, I don't know about you, Sean, but I feel like that's always the first sort of level of risk management, in a way. Even to apply, to enforce any sort of, degree of risk management to your positions, discipline is the very, very first brick of that foundation.
Yeah, exactly.
Till this day, I don't put on a position if I don't have my risk management sheet on me. It's very simple. You can ask Sean. Like, there have been so many times I'm just like, I want to take this trade, but I have to just stay out of it if I cannot access my risk management system on the spot. Yeah, look, Philippe is like, I'm so glad I put my MRM strict. Yeah.
Yeah, like, you guys are gonna usually feel like mango's far too tempered down during the bull markets, but if you guys just stick with it for the long run, you guys are gonna see why. Because when the volatility goes against you in the wrong direction, 5x leverage, 20% move, your account is liquidated.
Sounds like Mark is listening to Krisha's chart. So I have one more target for you guys. Now, this is something that I was sort of playing around with, and I think there is like a tail risk to even price action here, because what are we really going off of right now, right? We're going off of the historic support that Bitcoin has always played extremely well off of. And what is that historic support? I'm gonna get back on over to where's your? Can you put on your 200 for me?
The 200
The
moving
200
average?
simple moving average. Basically
on
the
the
200
weekly or the
MA,
monthly?
the weekly. 200 MA and the 200 EMA.
Okay.
So let's just turn those two things on because
You want everything else off?
no, we can leave the rest on as well. Actually, you know what? Yeah. What the
Turn
hell?
off the
Turn off the Ichimoku. Right, so where exactly are we getting that 22K region from, right? We're getting it from the 200 simple moving average. Now, why? Why are we putting so much importance on that 200 simple moving average? It's because historically, Bitcoin has played extremely well off of that region. Now, Sean, do we have BLX here for more price data?
Mm-hmm.
Where is that? That's this? Okay. Okay, there we go. Right, I'm just going to zoom out of this. I want you guys to notice every touch of this level. Does he have it rounded out? Okay, no, but I can mark it out for you. And then Sean can delete it later the way I delete his lines later. But anyways, so this is the first juncture right here. I want you guys to notice the bear market of 2015. Where did Bitcoin get supported at? It was that weekly 200 simple moving average as well as that weekly 200 exponential moving average. Right? Now, once again, the bear market of 2019, where do we find support on? The weekly 200 simple moving average. Right? Gonna draw that out for you again right here. Sean's gonna delete it, like I mentioned, giving him the task. Now, once again, COVID dump. Guys, COVID dump, something so unexpected. We fell from a position of strength, Price dropped. Where do we get supported on? Weekly 200 simple moving average. Okay, now once again, guys, we're sort of making our way down there. Now this is the BLX chart, so it is not sort of updated just yet. It's a bit lagging, but we're already halfway to that 200 simple moving average. Once again, that's where we're getting that number from. However, because we are seeing unprecedented times in terms of, you know, what the bond market is doing, what the Fed is doing, there's a lot of like uncertainty in the market right now. And that's why I want to allocate a bit of tail and risk here, right? And what do I mean by that? I mean that could price come down lower, like for instance, Sean, could you, I'm going to hit this, could you hit the delete button for me? Okay, I want you to look at this COVID dump, right? Just for this moment, Sean, I promise you I'm going to zoom right out. This moment, I'm going to just zoom in.
Yeah,
I want you to notice this wick right here. Okay, fine. You know what? We found support on that weekly 200 simple moving average. We lost it very briefly for 1 week, took it back the very next week, and pop, we started trending on that. But I want you to notice this wick. Okay, what was this COVID wick here? Like, what was the percent on that? Let's go ahead and take the percent on that, shall we? Okay, COVID wick was 25%.
Yeah. So think about it, 5x leverage
You're
on
toast.
the 200 moving average, you're wrecked. So that's a liquidated account.
So that's liquidated. Just on the wick, guys, on the freaking wick. If you got that wrong, you are done. So now once again, what is the risk here, right? What is that level that Bitcoin could come down to if we fall past the weekly 200 simple moving average? And well, I have a target for you guys. And yes, I have extrapolated this target with my numbers, with my forecast models. So bear with me while I bring this up on my chart so I can give you the solid number. And Sean, that number comes in at $18,700.
Krishna's giving you guys key, right underneath your circle.
Right? And I think that is going to be that wick target if we do get a capitulation event. I'm just going to go ahead and turn this nasty purple into a nice white. There we go. All right, 18,700. I want you to notice there is some historic significance on here that also marked the candle close highs of the last bull market where we actually got up to that 20K region. And once again, that was also a quick pit stop here in November of 2020 where price actually started rallying towards 60K. But I think if there is that wick risk, it's going to be at that 18.7K region. So that's the one region I'm going to be keeping my eyes peeled on. Right? So tell me, do you guys have targets lower than the weekly 200 simple moving average? Because yeah, that could be
let's put a poll up.
Plausible thing.
Put up a poll asking everyone if they think Bitcoin cracks the weekly 200. Okay, I'm going to take a few questions while Kusha sets up the poll.
I'm not admin yet.
Oh, damn. Can I make? No, I don't think I can. You'll have to log in to.
Okay, I'll do this. Yeah.
A month back, you said the same thing, Krisha, and I'm still waiting for 18K. So, Sam, what you need to understand is when we make a prediction or forecast, it's never going to happen like that, dude. Okay, if you're looking for instant calls, I don't know, maybe Mango isn't the channel you're looking for, because similar for when we said Bitcoin, right? On the monthly, when we lost the 10 SMA, man, all the way back over here, right? Over here, this was December 1st, we lost a monthly 10 SMA, and we were calling for the monthly 21 EMA test, monthly contagion test, monthly 21 EMA test, etc. It happened only like a month later. Like, things take time. Like, when you're playing the higher time frames, it's going to take time to play out, right? Patience is rewarded in this market, right? And that could be edge on its own. Understand that. Everyone wants quick, instant results. Okay, moving on to the next comment. It cracked for COVID, so just wait for a week and holds. Black swan exception. Yeah, so yeah, that's a good point. Bitcoin has never experienced a full-blown recession. We haven't begun to see what's to come for the economy. That's true, man, but understand that if the markets... Okay, this is what we all need to understand as well. Bitcoin has not seen a full-blown recession, but the markets have really not seen a full-blown recession since 2008, right? Ever since... you could go all the way down to Greenspan, really, who started the trend of doing this. But Bernanke came in a big way in 2008 financial crisis and opened up a can of worms that the Fed is going to struggle to go back from, right? You can't really put the genie back into the bottle once you started the monetary policy that they started in 2008, because and why would they risk a recessionary environment after everything that the market has already gone through, right? They want to keep inflation down, but if they keep inflation down and they're failing at that, by the way, but they also put the market into a recession, they're going to go into a stagflation environment, which is honestly worse than a depression, right? And then if that turns into an actual depression, it'll just get really bad. So understand the Fed has a lot of tools to stop an actual recessionary environment, and they may actually risk inflation just to keep people employed, right? If it comes down to that, they will do that. But no, I completely agree that Bitcoin has not seen an actual full-blown recessionary environment, but let's see. We are living in different times, man. We're living in different times. Bitcoin against money supply, I do have that here. Ooh. So Bitcoin has cracked weekly 200 money supply, but it's done that before in the past too, Murali. It's closed underneath, it bounced over. It's not really played out too well, like using it as support at the very least. So it could. You good? Did you manage it?
Yeah, I suck at polls.
Oh
But
God!
go
What has
ahead.
she done? She's like she's given people 4 options. Man, just yes or no, Krisha.
You gotta make it a bit more versatile. No limit orders, as in like spot limit.
Spot orders.
Spot.
Yeah, spot.
Spot.
I will not. My only leverage trades are in the direction of the trend at the moment, right? So I'm not going to be putting any long leverage positions over here. I'm putting short leverage positions. So I do have a short Bitcoin position, but I'm not putting any long leverage positions over here because you don't know what kind of market panic could set in. Okay, what you guys need to understand is there could be so much contagion risk that we're just not aware of, period, right? And any leverage position in crypto especially could really get nuked through, right? Buying spot on the dips could work out for you as long, because honestly you wake up and the wick is come and gone and you're like, if it never happened and you wouldn't even know, right? It wouldn't have mattered to you. either way. But when you're leveraged, you could wake up and your account is gone. I've had my share of pain doing stupid shit, so none of that. But spot positions, yeah. When pertaining to leverage, trade in the direction of the trend. Trade in the direction of the trend. I do have Sol shorts as well open, so I'm not trading any. Am I looking to buy Sol spot? Yes. Why? Just because I'm looking for like really low positions, not because I know anything about Solana other than you can buy NFTs with it, right? That's all I know about Solana, period. So and also I'm not going to be too keen on buying altcoins, guys, unless I start really seeing Bitcoin dominance come down to those levels I was talking to you guys about. So I want to see Bitcoin dominance crack this horizontal, and then we have a chance of Bitcoin dominance coming and testing the Tenkin and the Kijun. In that case, altcoins will temporarily outperform Bitcoin, and I want to be in that move temporarily. So I'll just be trading the volatility. Do you understand me, Kusha? Kusha's probably too busy chatting with you guys. By the way, if you guys haven't hit the like button yet, please go ahead and do so. That's one way you can really help out the channel. We've been coming in here day in and day out ever since the bear market started. Go ahead and motivate the Mango team by showing your love.
Yeah, that's one way you can help the channel. Hit the likes.
Okay, I want to take a few more questions. I want to hide the poll. How do I hide the poll?
Jamie Leroy gets it. He's like, cycles are just playing out. Indeed, guys. And I think that's
again. So just to answer everyone's questions, if you guys really want to see when the Fed is going to be forced to step in, watch out for this market breaking. Okay, watch out for this market breaking. When the Fed is forced to step in and give liquidity to the market, that is the Fed capitulating on their narrative.
How much collateral is just being sort of... There's a lot of collateral that's just going to shit right now.
What's going on with Ethereum? Yeah, what's going on with ETH? People keep talking about ETH, the staked ETH. Is the staked ETH the beacon chain ETH? Is that it? Like, I still don't know. But I don't think the weakness in Ethereum has anything to do with... Oh, it hit my target. There we go. I called it on Twitter. Are you guys following me on Twitter, by the way? I'm going to go ahead and chill my Twitter because I literally called this on Twitter just before coming on stream.
Twitter.
Where's my Twitter?
This is the BTC chart.
I'm trying to get my Twitter account to 1,000.
Guys, go follow Sean on Twitter.
Yeah. Don't follow these VCs who have been dumping Ethereum on you guys. Copy link. And let's do this. Window. Oops. That. Yeah. So this is literally what I said. I'm like Ethereum top of the cloud likely, and we were over here, and boom, we've made that move. Wait, am I looking at USD over here?
Yeah, as soon as the money printer goes off.
No, I'm looking at BTC. Yeah, correct. So
as soon as the money printer goes off, that's when things actually start turning.
This is what I called Kusha.
Good stuff.
Do I get a kiss?
Of course.
we saved so much Bitcoin by dumping all our ETH, right? Like, this is how you guys can save yourselves from a lot of pain. You don't need to go into like massive short positions. You can just like literally get out of the position, right? Get out of your altcoins and wait for better bids. And we're looking for, in fact, I don't think it's done really, but this could be definitely a bounce level, right? Again, right here, we reached.
There's a lot of data you guys can use to be optimal during the entire cycle. Now, for instance, Bitcoin dominance will literally tell you when the altcoins have the edge and when you should start looking at the altcoins. That's when you look at the Bitcoin dominance chart. So use like various charts to really help you form your thesis on broader market conditions, because that's essentially what's going to help you and your portfolio do way better.
Exactly.
Right?
And don't listen to these guys. Don't listen to freaking Travis Kling. All right. Like, let me go ahead and show you guys what he said. I'm gonna go trace back the tweets. He posted this chart to you guys. He marked out the Ethereum 2.0 merge okay, and potentially about when the Fed slows tightening. Well, we're nowhere close to 31st August. I totally agree when I totally agree that the Fed may actually slow tightening around that time. But look at the chart he posted. He posted a chart that literally is the most distributive pattern I've ever seen, okay? Into a massive event. He knows better. He knows better. But he's literally posting this because he wants liquidity to empty his bags out. And yeah, so I replied to that nonsense saying, he's like, what is it market telling you? I'm like, well, the market's freaking telling you that you're being distributed to. Why have so many VCs been shilling the Ethereum merge? Seems like the most overcrowded trade at the moment. Makes me want to dump all my Ethereum and buy more Bitcoin, right? But even then, guys, don't want to get too cocky. You want to wait for the confirmation. We waited for the confirmation, sold all our Ethereum, and what do you know? Boom, 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 boom. Don't let the VCs freaking dump on you, period.
Julian's like, that was a great call, Sean.
I'm just not loud about my calls. I think I need to start being loud. What about my big call on the 10 SMA Bitcoin?
Yeah, that was a big one, guys.
Right?
Like,
what about my big?
What
about, like, I've made so many big calls, but I'm just a bit too modest, I think, because I've noticed people are like so good at like marketing and advertising themselves. I need to start doing that shit. Right, like we've had such great calls. What about this big trade over here, huh, Krisha? In last bull market, rather the last bull rally when we had the bear trap here. What about this big call that we had?
That was actually really impressive.
We've had such great calls, but other people are like getting so much credit for bullshit, for such bullshit, right? And now again, close underneath the weekly 21 EMA, got the perfect retest short into the weekly 200. It's coming, right? These are like such simple trade ideas on the higher time frames, guys. Simple trade ideas on the higher time frames. We're not using like anything fancy over here at all. These are free indicators too. You guys can use more special indicators if you wanted to add more edge, but you don't need to. Just need simple technical analysis concepts and good risk management, and you get good trades.
Sean Tambia says, most people don't have the patience to, one, listen, nor to learn. Indeed.
AJ says the BTC chart was very technical. Was it? You mean Travis's chart? Or my chart? Was this like... I mean, do you guys want me to start posting more of this on Twitter? Spam, yes. Or if you guys want me to stick to like history posts and post tidbits of history. What do you guys want, charts or history? Or both? So it's like type either charts, history, or both. Oh, Sean's like both. Because I don't, I want my Twitter account to be a place where people come to and know what they're getting. So I don't want to overcrowd it with different kinds of things, you know.
Teal, can we get an ETHUSD analysis?
Yeah, man, for sure. So Sol USD, by the way, if you guys want to know where the bound zone is, it's right here. For those of you looking for Sol, it's right here, but we'll come back to this at USD. At USD soon too, by the way, if it's not already hit. Weekly 200, yeah, there you go. It's right here. This is the support zone.
Wow.
1,200, right? If we crack the weekly 200, we have monthly support. I have a lot of levels here, guys. Apologies. I do have a cleaner chart. Give me a sec. I have a cleaner chart for you guys, but this is the weekly 200 support zone. Keep an eye on that one, and I have a chart here. Yeah, so this is a cleaner chart for you guys. So look at this zone here as your wick zone. You could definitely come down lower, is what I'm trying to say. But this is like the accumulation zone for Ethereum USD. So we're pretty much there for the altcoins, which is why I don't want to get too aggressive over here on altcoins, guys. Be a bit careful, right? And do shorting your altcoins.
So do you think all of these market reactions is because of the latest inflation news that came out?
I think so.
People are pricing it in?
Pricing what in? They're pricing in the Fed
it's
panicking. They're pricing in everyone else panicking. So basically, inflation is really, really, really bad for the economy because it screws up the entire business environment, right? So it causes a liquidity event like this, because at the moment what people are seeing is that bonds are useless, right? Because think about it, guys, if your bonds are giving you 3.5%, as good as that sounds, if inflation data keeps coming out, so let me visualize it for you guys. Okay, here's the trade that the bond traders were initially thinking. Yields come all the way up to 3 to 3.5%, okay, 3 to 3.5%, and CPI was sitting at around 8%. Now, the one trade idea is that, okay, you know what, guys, CPI month over month is going to keep coming down, and if I'm getting 3.5% in the long run, I'm going to forward price that, right, Krisha? They're forward pricing that eventually inflation is going to come down to 3.5%,
right,
to 4%ish,
right?
So that was the narrative in their minds, which is why 3.5%, 3% was a good buy for bonds. At that point, it's a good buy, right? But then, when are you invalidated on that idea?
CPI goes up.
When you get a higher high on CPI, right? When you make a new high, when CPI actually beats expectations on the upside, you're like, shit, maybe my idea is wrong, right? So that's where the bond market has a lot of volatility, and they start selling off their bonds because they're like, I don't want this 3.5%. It's not good enough. I'm getting debased. I'm getting inflated out of my value. So the bond market starts seeing pressure. When the bond market starts seeing pressure, and you're seeing the equity market also see pressure, guys. Let me turn on SPY for you guys now. Look at what SPY did on the inflation news. That was effing bad, man. Look at that. It was essentially a retest of the top of the cloud, and boom. Okay. What you wanted to see instead was us actually, or rather SPY, break the top of the cloud and start moving towards the upside. We didn't see that. So this is now screaming towards coming all the way down over here. So we have bonds selling off. We have the equity market selling off. What happens to the entire 60-40 portfolio, which has been trading for the past like 60 years now? Yeah, 60 years, right? Maybe longer. The 60-40 portfolio split is essentially saying I'm going to have 60% equities, 40% bonds, and whenever equities are doing bad, my bonds will buffer me. But now everything is going down. Everything is going down, right? And the only thing that could possibly go up is the dollar. Why? Because the Fed is saying they're going to tighten. What happens when the Fed is tightening? They're essentially, long story short, okay, they are taking, Kisha, listen to this. Trust me, you're going to want to listen to this. They are essentially taking liquidity away from the market and burning it. It's literally like a coin burn. It's kind of like a CEO of an altcoin coming up to you and saying, hey, I'm going to be burning so-and-so coins. I'm going to be burning 25% of the supply. I'm going to be burning 25% of the Ethereum supply. That's kind of what the Fed is doing right now with QT, because they are taking bonds, selling it to the treasury essentially. I'm really oversimplifying. And whatever dollars that they do get, they're burning it. Okay? And the treasury essentially needs to come up with a new buyers for those. That's a double whammy over there, Krisha. Because firstly, the dollar is being burnt, right? And on the other hand, the treasury needs to find new buyers for those bonds. So those buyers would have been putting their money elsewhere. They're now going to be putting that money into treasuries. So equities take a hit, but then people are selling their freaking bonds as well, and the dollar's getting burnt. So the dollar gets stronger, dollar strengthens, and that's what we're seeing right now. It's a very tight environment. Do you guys understand all of this? Do you guys enjoy that? If you guys did, hit the like button. If you guys did not, let me know, and I won't talk about this BS boring macro stuff that you guys don't care about.
All right, Jason Casper is ready to go very soon, so he's going to be joining us.
I should go fill up my water.
Here.
Get ready.
Okay, you want to
I'm just gonna
take a walk?
Yeah, I'm going to take a walk too. Use the washroom. I've been talking for a while.
For those of you who are into, trading the shorter time frames, Jason Casper can give you guys a lot of good insight on that. So definitely stick around. Sean is really good with the whole bond market thing. And I think the more you guys listen to him, he's going to probably just end up breaking it down in simpler terms. But just understanding this is going to give you guys some massive, massive edge, not just in crypto, even when it comes to trading the traditional market and understanding where the money's at. So pay attention every time he sort of talks about the bonds. I know it can be freaking intimidating, but it's not too bad once you get the little fundamentals of it. Not the sizzle, love the content. Thanks, man. Macros, good, very educational. Yes, indeed it is. Especially in times like this. It's weird. Like, what we're seeing right now is, okay, I think in simpler terms, there's no safe haven. You know, the 60-40 split in portfolio, where you'd have 40% in bonds and 60 in equities. That 40% was supposed to, you know, save your portfolios from drowning in times like this, but it's even like what's happening right now is that 40% is not doing its job. Literally everything is dumping. So this is something out of the ordinary. Very, very exciting times to be alive in. And apparently, was it sentiment, Sean? I'm not sure, but sentiment, or so the bond market hasn't been this bad since 1929. 1929 was that great crash that we saw, right? The Great Depression. So these are like some crazy freaking, you know, events that's playing out, seminal events almost, that's playing out right now. Sean Tavia is like, the only safe haven is beer. I agree. And gin. Add gin to that list. Sean is actually getting me some gin. He's being sweet. What?
Do you want one too?
Yes. Oh, I thought you were getting it for me.
No.
What a guy. Surprise me. $10.5 trillion was printed. So yeah, and that's the thing, right? So there was a lot of money printed, but I don't think all of that money got, you know, put into the system per se. And even if they're tightening, that's something that Sean and I were talking about today. Even if they are tightening, and tightening is akin to like a burn in crypto, if you want to sort of draw a parallel to that to understand it a bit better. Even if they're tightening, they're not going to take out that 10.5 trillion that they printed into the economy, well, back in 2020, right? It's not going to be anywhere close to that. So I feel like there's a lot of panic and there's a lot of like bearish events just being priced in ahead of time. So it's going to be very interesting to see what the Fed does. Because as far as the bonds are concerned, I mean, think about it. The Fed didn't even do anything. They didn't even hike rates and the bonds just sold off. So they have those numbers, and then they pretty much came in and shot on those numbers as well, basically driving the bonds up even more. It's crazy. Rainman says, I think Bitcoin will crash to 10K. How many of you guys think Bitcoin can crash to 10K? Which is funny that you mentioned the number 10K, Rainman, because that's actually a critical level on the chart. We're currently on US dollar index. Let's get on over to Bitcoin. I'm going to clear out this chart. Get on over to weekly. The thing about 10K is that someone had a good point in that oh, thanks.
I got Krisha a red drink.
Cheers, you guys.
In celebration of the big red candle. Cheers. Where's my cheers?
Cheers.
Jason Casper's on? Is he on?
He is
go, Jay.
ready. Let's see. He said, I mean, this was back. I think he's ready to go. I think. But we can just message him again.
He said he's ready to go in 4 minutes. Okay,
this
cool.
This was like
wow,
10
he's like
minutes
so
ago.
specific, like 4 minutes. Let's do this. Let's do this. Okay, did you set this up? Okay, I'll do it. I got it.
We got a funky earphones. I could take.
Alright, I'm gonna first try to call him. You guys ready to have Jason on? You guys ready to have Jason on?
Is this connected?
Oh, he's watching. He's in the live
Okay,
stream.
nice.
Okay. I'm gonna try to wait. Hold up. Got too many mics. we got 4 mics officially on this table now. So I'm looking at my input device, right, Krisha?
Wait, I think you can hear him.
Is that him?
Wait. Oh, there
we
he
can
is.
hear him.
Okay, sweet.
Okay, wait. I'm not sure if they can hear you yet, Jason. Just give me a sec. Can they hear Jason? I don't think they.
Not yet.
Okay, cool. That's good.
Mark is giving us the go.
Jason, could you say something now? No. Unfortunately, they can't hear you. I don't think so at the very least. Discord, man. Give me a sec here, Jason.
Here, I think I can help out. Yeah.
It's good.
No, you have the right
yeah,
device.
I do. It should work.
That's that. Okay, it's right here.
Oh, right.
Right, and then this.
Yeah.
And
okay.
then I'm blind from this far. I am blind, you guys.
Alright, let's do a 1, 2, 3, Jason. One last time. I can hear you, but Streamlabs doesn't seem to. No, I'm on a PC. Desktop audio. Yeah, that's exactly what. Yeah, that's exactly what I have though. Okay, let's do that.
Here.
I think it's that, Kush. I think it's over here. Output device. I should set it to.
Alright, they can still hear us here.
Yeah, they can hear us, but why can't they hear freaking Jason? Last time. Property settings. Apologies for the audio issues, guys. Apologies.
We're trying to get this sorted in the meanwhile.
And we tested this prior to. We tested this.
You know, technology never works when you need it.
Okay, I think you're on.
As soon as he said that.
Ah, there you go.
That was the key. That was like the open sesame right there. Technology doesn't work when you need it to.
All right, you're gonna have to.
It surprisingly just seemed to work. And look at this guy. He's right over here. Let me just go ahead and pull him up on cam too. Got the audio to work. Ooh, wow. That worked well. So now just switch to.
Here we go. We have the
this one.
Boom.
And there he is. The man.
Wait,
the legend. Cool. Jason Casper. How's it going, buddy?
What's going on, y'all?
How's it going? Everyone say hi to Jason. Welcome to the Mango Grove. Our first guest.
Yes.
First guest ever on the Mango Grove. So how's it going, man? How you enjoying the markets this morning?
Good, man. Yeah, I'm enjoying them. You know, I mean, I just got up and, you know, this might sound crazy, but the only position I'm in right now is a long trade. So
You long what at the moment?
I longed Bitcoin from 23,850.
Jeez, you actually caught 23,850, pretty much the wick.
Yeah.
Going well so far.
Yeah, I mean it's just a scalp, bro. So yeah, I'm up a little bit in profit, and my stop loss is at my entry, so I don't know what's gonna
Nice.
happen, but
So that's
yeah.
one of the big reasons why I wanted to bring you on over here, because your trading style is so it's like on the opposite spectrum of Mango's trading style. I was literally right here telling people that I personally would not be longing against. I wouldn't be taking any leverage trades against the trend, right? Especially high leverage trades. But you are completely comfortable doing that because your trading style permits that. Your trading rules specifically permits that. You have
Right.
a rule set where you're like okay taking a high leverage and trading against a trend. So you know what? Just go ahead and explain your trade idea to the audience. Right, we can start off right off with that, man, because the markets are freaking moving. Let's throw everything out of the window over here and just get right into it. Tell us about your trade.
Yeah, sure. So I'll kind of walk through the trade I took here. And again, this is just a scalp. So first of all, I want to say thanks so much for having me on the channel, man. I've been following you guys since November 2021. I remember it was like that weekend that XRP like pumped like crazy. Um, and you guys were in my recommended videos. I'm like, what's Mango Research? So started watching. Actually, believe it or not, I was cutting my own hair while I was listening to the live stream,
Oh,
and yeah, I'll never forget, man. So
that's awesome,
it's an
man.
honor to be on the channel.
Hey man, we're hoping
Um,
to do many more of these. We're looking to have Jason as a regular guest, guys, every month at the very least, because we need someone who's on the other side of our trading ideas and trading perspectives, right? So Jason's gonna be able to offer you guys a different perspective that Mango can. So yeah, man, it's great to have you here too. We've heard so much about you, even from members within our channel. So looking forward to hearing how you look at the markets.
yeah, for sure. So I'm out of the trade right now, just so everyone knows.
Nice.
But
Can you see that,
basically,
guys? How fast he's in and out of trades? Love.
yeah. In fact, I think I'm out. Let me check. No, I'm still in it, man. I'm still in it.
Okay. So now got
But
withdrawn.
it's like right at my stop loss. So basically, the way I trade, and this is actually unconventional for me because we're in a very fast downtrend. But pretty much we had a little 3 day order block right here, this level right here,
Mm-hmm.
and basically I'm just looking at low time frames when I see a level that I see that we're getting a reaction from it, right? We got a little bounce, and then we put in a higher low right here. Um, I'll simply just look for any kind of bullish confirmations and take a long. This is actually a pretty bad example, actually, uh, as because this is typically not the way I trade. But the thing is, if I know that I have a level right down here, right, and I think that we are getting a bounce, and now I see that we're potentially changing market
Mm-hmm.
structure here locally, right?
Yeah.
Then what I can do is when we come down for this higher low, I can look for something like, for example, here on the 12-minute time frame, I'll be looking for things like bullish divergences, which we see right here. I will be looking even on lower time frames to see do we have bullish divergences, and the answer is yes, we do. So like as we come down to this first low, we have bullish divergences. And then as we come to put in that higher low, we just see continuation right here on the oscillator. And then for scalps like this, I'll go into order flow and take a look at what's happening on a very, very like small time frame. So this is an order flow chart, and I don't know if your audience is familiar,
Yeah,
but we
I
can
was
see.
gonna ask you to do a quick explanation, like a two-liner, on what exactly is order flow for the audience.
Yeah, so order flow is basically just showing you the order book of the live buys and sells that are coming in the moment. And the reason this is advantageous to a trader is because um, if, for example, here let me kind of like draw something out for you. If we know that we have a level of support right here, and I don't know, can you guys see my screen right now
Yeah,
or
yeah.
no?
I've blown it up. I've zoomed it out for everyone, so they should
Okay.
be able to see it.
So in general, if we know we're coming down to a level of support, and we see in the order book that let's say we see in the order book that there is 100 million. 100 million shorts are opening up at support right here. And we can see that as price is coming down to support, 100 million shorts opening up. And then we see even more shorts opening up, right? And let's say we see 100 million shorts opening up at the first touch of that level. And then the second touch of that level, we have even more shorts opening up. Like now instead of 100 million, we have like 200 million shorts opening up, okay? But when we're looking at market structure, we see that the second touch of the level, price is actually making a higher low. So how is it possible that you have 100 million more shorts opening up at this level, but yet price is getting higher? How is that possible? The only way it's possible is that you have all these people market shorting into support, and then unseen in the order book are limit orders, limit long orders that are being filled up as all the FOMO shorters are opening up shorts here at support. And so this is telling us that there's bigger players in the market that are actually trying to long this level of support, and all the FOMO traders are shorting this level of support. And so we can expect to move to the upside. So when we take a look right here at this order flow chart, we can see that when price came in, this is actually right here. This is the first tap of that low. And this line down here is the cumulative volume delta, which is basically showing us are there more shorts or are there more longs opening, and it's showing that to us on what looks like an oscillator, but it's really just a line that's going from positive to negative, and it can go basically forever. And we can see that as we come to our higher low, right, we can see the price getting higher right here. As we come to put in a higher low, we can see the CVD is getting lower, showing us, hey, there's a lot of people trying to short this, but the price is getting higher. So that can kind of tell us when we're coming down to a level, for example, like this one right here, which is a level I have on my chart, and I know it's a level of support. I can look at all these things combined and say, okay, I can see that as we came down to the first touch of the level, we have bullish divergences on the oscillator. And then when we come down to the second touch of the level, I can see there's more people trying to short this down, but price is making a higher low. How is that possible,
Dude, are you guys? I hope you guys are paying attention, because this is freaking brilliant. This is brilliant stuff over here. He's not just trading the lower time frames, guys, willy-nilly. He's looking at things that really, really matter to actually catch those up thrusts. Things that we talk about in terms of like trades caught in the wrong side of the position because they're literally FOMOing into either support, right? FOMOing short into support. He's using that with actual validation with his indicators. Objective. This is all objectivity over here, guys. This is really brilliant stuff, Jason. Did not mean to interrupt. Keep going.
Yeah, and so the thing is with trades like this, guys, I mean, honestly, like a scalp like this trade, like the way I do it is very high leverage. So like even this trade, like I entered with a small position size. I've already TP1 like almost half the trade out already. Stop loss to entry. You can see here, even if this trade gets stopped out, this is essentially a break-even trade. So you're taking trades like this that are, basically, if you're going to be scalping like this, especially if you're doing it like on a day trade basis, the two best ways to do it are either take profit really early, or ensure that you're not going to lose anything really or early. So basically, like worst case scenario, I'll close this trade with like a super small profit. But best case scenario, this might get a little bit more, in which case I could close the trade with a decent profit. And if you get a few of these a day, it's not a bad day, and eventually you're going to catch a runner. But the main way that I like to trade is basically I like to identify basically sideways ranges with support and resistance, and basically just long support and short resistance. And today is a weird day because we're actually like losing some pretty key supports, right?
So but I remember trading a lot like your trading strategy back in back during the 6K region for Bitcoin, and especially during the 10 to 14K region. And the entire idea of longing against so everything that you were doing, I was doing more so with higher time frame levels on the lower time frame. So what I would do is I was like, okay, you know what? This is support. It's coming down to support. I'm going to scalp this, but I literally put a time limit on my trade. I'm like, I want to be in and out of this ASAP, right? And I would tell people that the lower the time frame I trade, the higher my leverage. And people weren't able to fully understand that. But you were right. You explained it so beautifully just now. I think intuitively people understand now that because you're trading the lower time frames, you want to expose yourself to the risk for as short of a duration as possible, right? And you want to be in and out as ASAP because you don't want the trade going against you and against you and against you. Is that how you look at it too?
That's how I look at it, but I'm more of a so a lot of times people fall into they run the risk of gambling when they're trading on these small time frames, right?
Yeah.
And at the end of the day, trading is kind of a form of gambling, but we're loading the dice in our favor. So the way I personally like to do it is, instead of being in and out of the trade ASAP, I am ensuring that I'm not going to lose ASAP, and then I'll kind of gamble with it. Because like right now, I've guaranteed that I'm not going to lose anything. In fact, I'm going to actually close the trade with more money in my account than I started. Yeah. But I could have closed the whole trade for like a pretty nice profit for a small scalp that I could have taken in a few minutes. But now I'm kind of gambling and saying, all right, now that I'm not going to lose, let me just go for gold. What if we do get some kind of short squeeze here? I don't know.
I see.
That's my approach. And
so the scalp needs to work out ASAP in your favor, and if it does start working in your favor, at that point you let it run. Allow it to run to go for the bigger win.
Essentially, I have a level below us, just like a little bit below us, that I'm actually looking to potentially get into another long. But the way I'm typically trading is, like, even though we've been in a downtrend for a very long time, I don't really look at the markets as like uptrend or downtrend. I like to always identify sideways ranges. And if we look at the downtrend, we can see just very clearly that we have, like, essentially always we see that we are trading. Yeah, there's always some kind of trend going on, always. Yeah. And even for the past few weeks here, we've had this trend. And basically what I like to do is I like to identify areas of overbought and oversold in these ranges, and those are going to be the majority of my trades. And the reason why I typically hold trades longer, even if they start out as scalps, is because if we're always like longing support and shorting resistance, eventually one of those shorts or one of those longs is going to be the one that like breaks out or breaks down. So yeah. I actually took a short from up here. I'm actually still in the short, and I didn't know. I could have just closed the whole trade out, taken a little scalp, because people were getting super bullish up here. But I just kept a portion of the trade open. I have like 25% of the position open. It's just still kind of running right now. And
could you give the audience some tips on that, because a lot of traders tend to want to take all their profits ASAP, right? But it takes discipline to hold on to 25% of your trade when it's going your way, right? I'm pretty sure you come across this question yourself too, where people want to take profits, but they're always deliberating. So how do you come up with either the discipline or the rule set of when to hold on to some of your position?
Yeah. Let me check something, because for some reason it looks like my stop loss didn't get hit just now. So what the heck?
Manage that. Take your time.
Yeah.
Going through the chat.
Sometimes, man, are you trading on Bybit? One of the reasons I stayed away from Bybit was because I've heard stories from traders that I respect tell me that my stop loss didn't get hit on Bybit, and I'm like, what the F was going on? I was like, I don't want to touch that, and but then I'm hearing good stories about Bybit too, so I hope it's not an issue with Bybit, man.
No, it was my own fault. I put a 8 instead of a 9.
Jason, people are asking, what time frames do you trade?
I don't really trade a time frame specifically. I'm mostly looking at time frames overall. So I know I'm about to show my own YouTube channel, but well,
No,
but
no, open.
basically,
By the way, guys,
I
Jason can be found at Jason Casper. That's his YouTube channel. Please go ahead and subscribe to him. He's really, really fun dude. I watched a few of his YouTube videos. It freaking made me laugh. That's one of the big reasons why I wanted him on over here. His Carl from the Moon videos are especially recommended. He's officially sponsored by Carl from the Moon. So
yeah,
Carl
it's
from the
crazy
Moon or
to be
Carl to the
sponsored by
Moon?
Carl.
Yeah,
It is
he's
crazy.
sponsored by Carl. It's like, he's a celebrity,
You
guys.
guys-
He's a freaking
You guys are
celebrity.
killing me.
I posted a video. Oh man, I guess it was a few days ago now. But how to scalp low time frames. 3 days ago actually. This video, if you want to know how I'm scalping low time frames, check out that video because I take a more comprehensive approach. So
Okay.
the way I trade is every day. Every single day I do my technical analysis and I'm looking for key areas where I can look for longs or shorts, and then I will typically enter the trade on a very low time frame. So for some reason, I guess I didn't restart my computer today. It's being really slow, but I can kind of walk through the process that I went through recently to get into.
Kusha, Jason is extremely disciplined in his approach to analyzing the charts every morning, right? And honestly, guys, if any of you are like are really really serious about like trading, day trading especially, I think Jason is the guy
Yeah.
to really really model after, because I've been keeping an eye on your Discord, Jason, and I am impressed. So Jason made me a VIP member on his Discord. Thank you for that, by the way, buddy. Jason's also a seedling now, Jason. So
I am, yeah.
yeah. So Jason's officially a seedling, and I'm like, damn, this guy is. He is the kind of guy you guys want to model after in terms of day trading, because he's really really disciplined, right? Really disciplined, and takes that kind of hard work. It does not come easy. If you're trading the 15-minute time frame, the 1 hour time frame, the 1 minute time frame, the 12-minute time frame, you guys need to also accompany it with the discipline that Jason brings to the table. And I can see that he's not all talk like the other YouTubers out there who probably talk about the low time frames and then go out and buy Lamborghinis and Ducatis, right? He doesn't have the time for that. This guy is actually
Yeah,
grinding. So
I think a testament to that, Jason. I think you get up at six in the morning.
4 in the morning, man.
Yeah. 4 in the morning.
Yeah,
Like think
about
about it. And
that.
that requires that requires discipline. I mean,
Yeah.
at one point I was getting up at say 6, and even that, like it took me, it took me a while to even get there, but to do this consistently, and even like, and I think Sean is right, guys. Trading the lower time frames, think of how much trade management is needed, and to even put yourself through that much, you need you need your wits about you. Number one, you also need that discipline and that system to follow, to be able to do that. So while people may make it seem like just like it's just easy, it isn't.
Yeah. So,
Well,
really impressed, Jason. Good stuff.
Here's the thing, like I'll even be the first to say I'm definitely not like an amazing trader, and there's traders in my Discord that are like much better than me, and what I do though is I'm all about creating systems that I can rely on to basically I'm all about creating like algorithms where the way I trade is I'm looking for a specific level, and then once price gets to that specific level, I have things I'm looking for that will basically tell me, do I enter a trade, yes or no? So it takes a lot of the guesswork out of it, and it's unfortunate that we're in these kind of market conditions right now, because typically I can be showing like trades that of like why I was looking, or why I took specific trades. I'm less of a scalper. I'm actually more of like a day trader, to be honest with you. Like I'm typically not taking scalps all day. I'm typically looking for specific areas. So like I can give an example of a
Please
trade
do,
that I
please do.
took. Okay, so whenever we see a massive move to the downside, or to the upside, that's typically when I'm like, all right, let's wait this out and let's wait for more data before we decide to make a move. So we had this big move down to 25.2 back on May 12th. And then we got the bounce, and once we started bouncing, this then gave us a pretty nice sideways range where we could look for areas of support and resistance to take trades from. So we can see that if we pull just like a fib, and I'm big on using fib levels from the first initial low that we got to the first high that we got. Actually, that was on the USDT pair. This is USDT pair. Then I should have prepared for this, guys. I apologize.
You're doing a good job,
No,
Jason.
you're doing
You're doing a phenomenal job.
And
Yeah. All right. Let me give you another example then. So, for the when we came up to this area, for example, this is a short trade that I took right here. This is a short trade that I took, and the reason I took this trade from right here was because we had some very important levels of resistance up there. We had actually, let me see if I can find the exact levels that we had, because in hindsight now it's hard to remember. And I had a very specific level, and I had very specific confirmations that I was looking for before entering a short there. So the way I am always looking to trade is, okay, if we have a level, that's definitely a level where I'm looking to take a trade, but what will get me into that trade? And so what I do is, after I do my analysis every day, I'll then set alerts at those levels to see if, when we get there, should I be taking a trade there or not? Because, you know, I'm a busy guy, so I'm not here like looking at the charts all day, like scheming away, waiting for the next trade. But so let's see here. Let me see if I can yeah, here we go. I'm going to show the chart that I had at the time because it's easier to see here. So right here, I was looking for a trade on that specific day from this level because we had basically a potential chickens drinking water trade setup, which is a that's one of the trade setups that I look for
love
here.
the name.
Yeah. And so I was looking, basically, we put in this first high, and I was basically looking to take that first high out with bearish divergences, and I specifically wanted to see them on the 1 hour time frame, on the 12-minute time frame, the 6-minute time frame, and the 1-minute time frame. And so this was my criteria for entering the trade here. And so all the criteria was met, and so I took the trade. So this is typically how I'm trading. I have key levels marked out on a chart. When we get to those levels, I'm like, okay, do we have reason to enter a trade here, yes or no? And so when we got to the level, let me see if I can switch back to the chart here. When we got to that level, which was right up here, put a little line there, we can see that this is the 1 hour time frame. We did get bearish divergences. I mean, pretty much across all time frames, right? Yeah. And that was just clear confirmation to enter the short. And when we got, actually at this specific level, we got some pretty clear Bart Simpson pattern confirmations. I mean, I was fairly confident that this was going to be a really juicy short trade, and it's because we had a level there. And then when we came down here, actually, this was another level that we were looking at, and so was this. And so I was able to get into along from here and also along from here. And all these trades, by the way, I've live streamed on my YouTube channel. So
Yeah,
you know,
so guys,
I'm not just making it up, you know.
There's people are not gonna be thinking that, dude. But if you guys want to watch how he how he explained all of these trades and actually took them, executes on them, go ahead and subscribe to Jason's channel again, Jason Casper. So Jason, I have a quick question for you. You have pre-decided what conditions will trigger the trade before actually taking the trade, right? So you have your levels, yes, but are there specific things that you're looking for that confirmation after that? Like you're like, okay, I want at least one bearish I want bearish divergence plus one other thing to trigger to give me that confidence to take the trade? Or is it just, okay, as long as it gets to that level, that's good enough for me to put on the trade? On top of that, the bearish divergence will give me more confidence to put on more leverage or of bigger position size. What is your criteria
Right.
for actually putting on the trade? Are you first support and resistance and then everything else is a bonus? Or is it, I have support and resistance plus I want to see bullish divergence, bearish divergence, etc.?
Yeah, so it's always a level and then plus some kind of divergence or confirmation. And typically I'm just looking to, like, whenever I see some kind of range, I would just simply just say, okay, we should long the support and short the resistance. This is pretty much how I traded this entire little sideways area here. And I'm pretty much using volume and fibs and some other levels, and then depending on the context of the trade is how confident I am in like entering maybe a larger position or thinking that I should look for divergences on higher time frames. So the way I'm typically looking is, if I know we're coming to the top of a range, I'm going to be looking for divergences on like the 1 to 4 hour time frame, right? But if I know, for example, that we're coming down to, for example, taking the long from right here, we came down to a high volume node for a really nice bounce from right here, and then taking the long from right here, we also got another chickens drinking water from around this high volume node. Then I'll be looking for divergences on lower term time frames, because we're not coming down to the low of the range, but maybe to the middle, which we know is like a support, but it's not the support.
Yeah.
And so it really depends on context, and so that's why sometimes I'll be like, I want to see a divergence on like the 1 hour and the 12 minute and the 6 minute, and sometimes I'm like, I'll take a long if I see divergence on the 6 minute and the 3 minute. It really just depends on the context. And
I hope you Mongolians listen to that sentence over there. It is a support, but it's not the support. That is so important. And to draw context to what Jason was explaining to you guys just now in regards to, hey, 1 hour time frame versus the 12-minute time frame, you guys could draw parallels to what we just talked about in terms of the weekly time frame versus the 12-hour time frame that we've been trading throughout the last week, right? We've been talking about the 12-hour time frame, and then we broke that, right? It wasn't the support. The support was the weekly time frame. Jason is doing the same thing over here in his range over here that he's identified, right, between the 1 hour time frame, and within that he's using volume nodes, he's using bullish divergence, bearish divergence, he's using order flow, he's using a bunch of concepts to get his high probability trade ideas. Brilliant stuff, dude. Brilliant. I'm learning a lot.
Yeah. And I mean, I really appreciate the way you guys trade. I mean, I need to learn from you guys, because it is I try and keep it as stress-free as possible, but I'm not gonna lie, like last night, I had been waiting for basically this move right down here for a while, like this wick to the upside, and I missed it because I was asleep, and it was kind of a bummer. But if I was trading more higher time frames, then I wouldn't have to worry about that stuff. But I do use higher time frames as well.
It's a give and take,
I mean,
it's a give and take. Like you catch trades that I will have to like give up on, because that's the trade-off, right? Because I'm focused so much on waiting for that higher time frame trade and to put on the trade with conviction. I do miss out on the lower time frame moves, because the high time frame trades come with the trade-off of having the mental discipline and the patience to just make sure that you have the trade management space. Because right, if you can't people like to put on multiple trades, but when you got to manage everything at the same time, you make mistakes. So if today I had to manage my low time frame trades and also put on my high time frame trades, I wouldn't be able to do it, man. I was like floundering about right before the stream to just manage my options positions to make sure that I'm properly hedged, etc., etc. To go through everything, like, okay, cool, we're going to be having Jason Casper on today. The stream is going to go past my there's a time slot where I check all my trades and manage everything. We may go past that, so I may not have the mind space to be able to actually take care of my trades. So that alone like made me flounder around today. So there's no way I can trade the lower time frames and do this. So it's always a give or take, as long as you're disciplined, right? And Jason's catching so many trades that otherwise over here at Mango we would miss.
So Jason, I figured, so now that you trade like the lower time frames and stuff, right? And the thing is that, I mean, it's crypto. So we know that the volatility can pick up like immensely, like in the middle of the freaking night. So how do you sort of manage your trades, well, while you're asleep, right? Because you're trading the shorter time frames. And I'm sure like a lot of people would love some insight on that. How do you manage your trades that you are in and trades that you're sleeping on?
Yeah. I mean, pretty much it's as soon as I lock in some profit, I just don't worry about it anymore. That's pretty much the way I handle it.
So what he does is he puts his stop loss up, and then that trade is pretty much riding free because now he's either in profits or break even. Correct, Jason?
Correct, and it's really a psychological thing for me. So a lot of people like comment and they're like, "Oh, you're such an idiot. Like, why not just close the trade with all this profit?" Because I'll leave like thousands of dollars of profit on the table, and I'll gladly just not take that profit. And the reason for me is because it's a psychological thing. Like it will prevent FOMO if, let's say, for example, you were in a long and then you decide to close the whole long after like a 3% move. That's great. But then all of a sudden we get like a 9% move, right? You might be tempted to re-enter the trade now with a really crappy entry and then have price go against you. Well, if let's say you're in a long trade and you hit TP1 after 3% and then you just move the stop loss to your entry, well then, if we get that 9% move and you've taken even half the trade out, now you still have half the position open, getting another 6% move to the upside. So half your position on a 6% move is basically the same as 100% of your position on a 3% move.
Exactly.
And so you're still able to make profit. And then what else I do is I counter trade myself, right? So if you follow my channel, I talk about being schlong, long and short at the same time.
Schlong.
Yeah. Schlonging it, baby. So like a lot of times, like back in this range here, I was short from here, and I was long from here at the same time, and basically then once I'm in this point, both trades I've taken half the position out at least, stop loss to the entry. It's like I can go to sleep no problem. And this could happen, and I wake up in massive profits, or we could dump down even more, and I could wake up in massive profits. It's like I'm basically hedging myself on a micro scale, and then
let's break that down. Let's just break that down.
Yeah.
Because I think that's going to be that's going to be really insightful for the audience who's listening. Okay, so what Jason has done, and Jason, correct me if I'm mistaking, or I'm misunderstanding. Okay, because I'm trying to understand this too, because the schlong idea is genius. Because it's more of a psychological approach, and people might be like, "Oh, well, he's longing and shorting. That makes no freaking sense." But it actually does make sense now that I understand his trading style. Because what he's doing is he's, for example, shorting at resistance. Okay, as soon as the trade goes into profit, right, he takes his profit out. Okay, and he's now letting it ride. That's a different trade. That's trade A. As soon as it hits support, now he's taking a new trade. Okay, trade B, and he's longing that.
Right.
Okay, that goes into profit too, support and resistance. And now these are two different trades that he's running. He's long now. He's taking profits on both of them. They could do whatever he wants.
Yeah.
And if they meet each other, he's already, both of them are on profits now.
Right.
Right? Is that the correct idea, Jason?
Yeah, and so my goal is not to make as much money as possible. My goal is simply just to grow my account like over time.
Boom.
And so
Boom.
the approach I mean, and that's not for everybody. That's not for everybody. That's just the way I do it, and it works for me, right?
But you know what, Jason? I think that's what everybody should aspire to. people should stop trying to be so optimal on every single trade and really think about the long run and ask themselves what is sustainable. Because when we start obsessing about each single trade and its outcome and being efficient as optimal, we start being like, oh, I could have had this much, I could have that much. You lose out on it becomes stressful. It's not mango at all. I'm pretty sure Jason wouldn't want to live his life like that either, and he's not. And it doesn't grow your account because you obsess and you make mistakes, right? You just need to grow it, like
Right.
Jason said.
You should approach every trade as if it's going to go against you, and then once you can assure that you're not going to lose money, then do everything you can to keep the psychology good. Like I mean that's my main focus, because I mean I had the propensity, like when I first got into trading, to basically, oh man, everyone knows the pitfalls, because the psychology is really what messes up most traders. I know so many people who are really good at technical analysis. They could sit there and watch a chart and tell you everything that's going to happen, and it happens. But then once you actually have money on the line, it does change everything.
Yeah.
So my number one goal is to say, okay, how can I mitigate those psychological stresses and make it so that I'm going to be successful over time? And the way is basically just, I would be perfectly satisfied with, if I took trades all day and I broke even for the day because I basically locked in a small profit and then got stopped out of my entry. That's totally fine, because one of those trades is going to be a runner and it's going to turn out really well. But it's better than assuming every trade is going to be a runner and then you take like these massive losses and you're down like 1, 2, 3, 5, 10, 20% of your account.
Usually when I talk to traders, I can really tell right off the bat whether they've actually traded or not, based on what they say, right? Traders who are actually looking to win on every single trade have not really put on real risk for a prolonged period of time in the markets. Now, Jason, guys, if you guys are paying attention over here, you guys are probably noticing the key sentences that he's emphasizing that really, really prove that this guy is the real deal, right? Because he's saying things like,
I mean,
I want
let
to
me just say, guys, like I'm sorry to cut you off, but
No,
I'm not like the best. I'm not like, just so everyone knows, like I'm not the best trader in the world by far. I'm not, right? So I just want to make that clear. Like I'm not out here trying to say, hey, look at me, I'm like so awesome. I'm just trying to show like what has worked for me, and just what I feel can help other people as well. But I'm definitely not trying to make myself out to be some amazing trader, because like I said, there's people out there that are so much better than me. So I just want to make that clear.
People can learn from, right? People can actually learn from people like you who are open and honest about how you lose money, how you manage money, what really plagues you as a trader who's not perfect, and how you manage things that are not perfect, right? And that's what I tell the audience over here too. Guys, if there's something that helps you psychologically, just do it. It may not be the most efficient thing to do as a trader, but if it's helping you psychologically, it is the most efficient thing to do as a trader, right? Because that helps your long-term sustainability. And you touching on that idea, you want to mitigate the stress, right? You want to mitigate mitigate the psychological stress. If it helps you, it helps you, right? It's brilliant. Really, really good.
It's the process, because I feel like it's that process that you set in for yourself that sort of separates, and it's always the process that essentially ultimately sort of separates a gambler from a professional speculator, right? And I think that's something that you have.
Right.
And also you're like super, super humble, man. Like everyone is complimenting you on that, Jason, in the chat.
Love it, Jason. Jason, I have a question for you. When we talked last, you talked to me about how people jump from trade strategy to trade strategy, and how that may not be the most optimal. Could you expand on that for the audience?
Yeah, for sure. So what I found to be really helpful in my own trading is to keep it as simple as possible, which is basically just support and resistance, and really just looking at market cipher, which is the indicator I use for divergences. And it's so simple. It's like overly simple. It's just you're drawing a line on the chart and you're looking for divergence. But a lot of times, newer traders, they try that and maybe they don't have success right away, and so now they jump to like completely different strategies, and they're like doing like Elliott wave counts, and they're doing like the Wyckoff accumulation, and they're looking for all these other things, and they've never actually even just traded successfully using like the RSI and Bollinger Bands or something super simple like that. And I always recommend you have to find a strategy that works for you, and you need to keep it super, super simple. And then you have to keep working on that. Once you have something that works, you have to keep working on that to make it better and build to what you already have. Like so many people, they want to like tear down the whole building and start over instead of saying, okay, look, I have this building here. It's not exactly what I want, but you know, I can work on this, right? I can work on this to make it better, right? So that's I don't recommend jumping from strategy to strategy or anything like that. I would recommend just sticking to what you have.
Yeah.
I've made videos about it, but if you do want to get into Elliott waves, like that's awesome because that can be really advantageous to you. Or if you want to start learning, you know, TPO, that can also be very advantageous to you. But if you're new, like start with the basics because really at the end of the day, support and resistance, that's like that's it. Like that's the bread and butter of trading. That's the only thing you have to give you any kind of reference point as to where price is, you know?
Because even when a trend begins, it usually breaks out of a range, right? So figuring out that range is almost the first thing everybody should learn how to do. Support and resistance is the bread and butter, I think, for every trader. And if you're skipping that, you're skipping fundamentals. Why do you think it is that traders, from your experience, okay, from your experience with your community, why do you think it is that traders actually do jump from trade idea to trade idea, or trade strategy to trade strategy? Why is it that they feel the need to find the next new shiny red ball?
Well, that's kind of hard to say because I think it's because a lot of people come into especially crypto trading with the desire to make a lot of money really fast. And that's kind of how crypto's been viewed in I guess like the mainstream YouTube internet as like, do you want to get rich? Well, crypto's the way to do it. And so people come in and they're not making the gains that they want. And so they're like, okay, well, I must not be doing the right thing. Like there has to be some other kind of secret. People are always looking for like the secret indicator or the secret strategy, or you know the perfect, you know, way to go about it. And so they're on this constant journey, and they're never going to get there. Instead of just focusing on, you know, the things that they should be, right? The fundamentals of trading.
So, if you had to look back at your journey as a trader so far, could you you don't need to be too specific, but you could you tell us a story about one of the mistakes you made as a trader that really stuck with you and that really shaped you as a trader? Because we all have at least one or two of those stories.
Yeah. I mean, for me, man, it was my biggest issue was always risk management. That was my biggest issue, was risk management. I and chasing price and basically just not sticking to my strategy. So when I first got into trading, I was primarily I first got into trading stocks, then I went to forex, and then once I found out like derivatives trading was a thing on like on Bybit and stuff, that totally changed everything for me. And I was doing kind of well. But then I would have like really good weeks of trading, and then I would blow everything in like a day, right? All the hard work that I did gone in a day in one trade. And that happened to me many times. And I remember there was one specific turning point where I lost $30,000 in one trade. And I was upstairs on the floor, lying on the floor, literally crying to my wife, telling her, what is wrong with me? Like, because here's the thing. Every trader knows what they're doing wrong. I firmly believe every trader knows what they're doing wrong when they're taking huge losses like that. I'm not talking about taking a loss
And we do
because,
it anyways, man. We just do it
exactly.
anyways.
Exactly. So So for me, it was risk management, and it was really dialing in like, okay, I'm not gonna risk more than like 3% of my account per trade, and that's like really the high end of it too. Like I usually am putting like between 0.5 and 1% of my allotted trading capital per position. And maybe if it's like a really juicy level, I might put like 2% or whatever.
Yeah.
And that has really totally changed it for me, because then if I take a loss, right, I'm losing 1%. It's like big deal. I still have all this capital left. I could still be profitable for the week after a 1% loss.
Yeah.
And if I just stick to that process, maybe even if it's a break even week, or even if the week ends slightly in the red, it's not setting me back. And that was my biggest struggle, was setting myself back by not like sticking to the process, you know?
So one of the comments
So
over here from Tan Swan says, Sean, Jason's story sounds a lot like your story, lol. And man, I have a very, very similar story. And my trade was back in early or mid 2018. Uh, and yeah, dude, at the end of that, man, at the end of it all, I literally just walked out of my room, sat in the cold floor of the living room, completely bare
mhm.
living room, just for hours, just staring. And all that was going through my head was, what the F did I just do? You know, you're
Yeah.
just freaking stunned with yourself. You're just like, how did I let that happen to me? How did I do exactly what I should not be doing? And this is why I tell people that, you know, you're not going to come across a good trader who's not also a good person, because the markets will humble you. The markets will beat all the obnoxiousness out of you, will beat all of the arrogance out of you. All of your the worst things about yourself will be laid bare on the table for you to look at, and will be thrown in your face. The market will pull it out of you. So yeah, man.
But those are always like the most like the butterfly effect sort of events of your life, right? And that sort of change that shapes you as a trader. It's just funny how all the stories end up on the
Cold
floor,
floor.
on the cold floor.
You're
Yeah.
literally
Seriously.
grounded, man.
Well, I mean, honestly, in trading, it will show you how horrible of a person you are, because it reveals your character flaw. It's a very spiritual thing for me too, like because you know, I'm a spiritual guy. I'm a man of faith, and it's like, you know, when it comes to like faith, it's like the spirit versus the flesh, and it's
Mm-hmm.
like you know the right thing to do, but you're not doing it because you have these fleshly desires that
Yeah,
are like
yeah,
evil trying to
yeah.
fight.
The
And
deadly sins, man. The deadly sins.
yeah, and it's, I mean, trading will just reveal how much of you know, a bad person you are, because it's like, you know, especially for us, like, and I mean, everyone has a different, but for me, growing up like in the United States in like the 90s and the 2000s, it's like instant gratification. You
Mm.
know, everything you want, you can have it right now. Everything's
Yeah,
handed to you.
yeah,
Like,
yeah.
uh, everyone gets the participation trophy, right? And so it's like the dopamine addiction. You know, we're
Yeah.
so, and when you introduce trading to that, it could really wreck you and show you that you're not disciplined, you're not patient, you know, you don't have self-control. It's like all these things that it will show you about yourself. And I find that the principles of trading carry over into a lot of other aspects of life, like fitness or relationships, or, you
That
know.
was going to be my next question to you, man. Because one of the things I used to talk about over here at Mango, this was last year, or rather before COVID, I was like, I used to tell people at the gym too. I'm like, man, if you are, if you can do this at the gym, if you can come here day in and day out, or you can come here disciplined you 3 times a week, the way you are, if you are able to build your body, man, you can be a good trader. You can take that discipline and bring it onto the charts, right? Because
Yeah.
even to reach your physical goals, right, your fitness goals, like all of those same temptations, the cheesecake that we want to eat, all of the pizza, like all of that, we got to resist, right? It's the
Right.
same thing when you want to long into support, long into resistance, right? It's the same freaking thing. You're seeing the breakout. You're like, no, I want to long this, but you're like, nah, I shouldn't. I shouldn't. It's the same thing with cake. Same thing with cake. That same discipline, you carry it on over to the charts. And yeah, I'm so glad you mentioned that. You mentioned something else in regards to instant gratification. Do you think that's one of the reasons why people don't want to hold on to a bit of their trade when they can let it run, right? Like I think that goes hand in hand, eh? That instant gratification culture that we've grown up in.
I'm not really sure, to be honest with you. I think it depends on the person. Like a lot of people get into trade. I have so many people who message me and they're like, "All right, Jason, like I just took your course. I quit my job. I have 50 grand and I'm gonna trade full time." And it's like, I don't know if that's a good idea. Um, I think it depends on the person, but if you're desperate to make money, I think actually desperation can
Yeah,
cause people not to hold on to
do
a
well.
trade.
Yeah.
Yeah,
Oh, I see. I
but
see.
this, yeah. So it's hard to say, man. I really I think
Have,
just for many different reasons, I think it could be.
have you read any of the works by Richard Dennis, one of the biggest trend traders during the commodity era of during the 1970s. One of his best friends had a quote that has really stuck with me, and I mention it here all the time. He says, "Amateurs amateurs go broke by not taking their losses. Professionals go broke by taking all their profits." And I think
Hmm.
that was one of the most profound quotes to me that stuck with me. And I
Interesting.
think about that. If you as a trader, you can probably like go like, that does make sense. When I tell that to a
Yeah.
new trader, they're like, that doesn't make sense to me, right? Like people
Right.
say you'll never go broke taking profits. I'm like, you've not traded long enough, man.
Well, yeah, I guess it depends on that because that is a true statement, right?
Yeah,
That is definitely a true statement. Like you'll never go broke taking profits, but
but it takes that
yeah,
one trade, like you said, that one
yeah,
trade, right? That could
yeah,
go
yeah.
against you, that could eat into all those profits. And similarly, that same one trade could be the big winner, right? Like you leave 25% in because you're trying to catch the
Right.
big run, right? That 20, and
Mm-hmm.
like you said, that 25% trade could not just be 100% of your initial trade, but it actually could turn into 200%, 300%, 400% of your initial trade, because that's what crypto offers you.
Right. Yeah, that's yeah. So that's definitely true about letting a portion of that trade ride. Like who knows, right? Who knows what might happen? But this is actually a good example of a trade setup. So you could see here we had this level. Look at this. We
Hmm.
wicked right down into it.
Yeah.
And that's a level I have in my chart. I've been waiting for it. And as we come down to the level, right, we could see that we even do it's very slight here, but on the 1 minute time frame, we can see momentum getting higher. And
Hmm.
if we also take a step out, we can see that if we draw a line on this money flow on market cipher, it's coming up. And if we go to the 6 minute time frame, we can see like even more clearly bullish divergences as we come right to that level, right? And so this is kind of like the things that I'm looking for. And then basically I would take the trade and then lock in a profit very early and then stop loss to the entry to guarantee if it's gonna be a winner or not. And even now, like, so I have the position open right here. I've already locked in a profit right here, and my
Nice.
stop loss is at my entry. And worst case scenario right now, I get stopped out of my entry. And let me just make sure my stop loss is right here. So it should be 23616. Yeah, that's right. And so like now, I've taken out a portion. Worst case scenario, I get stopped out plus the market fee. So it'll be a little less than this. But best case scenario, what if we get what if we get a move from here? And so I'm taking profit and I'm not taking profit. So
Yeah.
it works both ways, right?
Yeah.
I'm not going broke because I'm taking a profit,
Yeah.
but I'm not going to go broke because I'm not taking a profit. If this, this is going to be a bigger move, right?
It's about taking all your
So
profits. When people take all their
yeah,
Yeah.
profits, right?
Yeah.
So
yeah,
the quote is, when you take all your profits, you could go broke. So you're
right,
leaving it to run, because these when it does run, right, it pays for mistakes. Like a trade that does run and runs well, it could pay for like 3, 4, 5 bad trades that don't go your way, because as traders we could have like loss after loss after loss after loss, right? And that one winner that you do catch, and if you take all your profits, and it could have been the one that runs and pays for like 5 losses after, that's how people actually go broke, because your account has a limit before you have to like call it quits.
Yeah, for sure. And like in my experience, it's like it's like small win, small loss, break even, small win, small loss, break even, big win. Um, and those big wins are going to be the ones that really grow your account. And because and small losses and small wins are basically break evens, right? I mean, my biggest trades, compared to like if I get stopped out right now on this scalp, even with a small profit, that's just a small. That's basically a break even, right? I went for it. I made sure I'm not going to lose. Stopped out at entry, but if this just so happens to be, because believe it or not, like I took a long from I think it was like 31.1 when we came down to that last major low over here back on December 23rd. I'm pretty sure it was. Or I'm sorry, January 23rd or 24th from maybe it was December. I can't yeah, was it? No, this was it was right from here. Yeah, I'm sorry, 33.1 from right here.
That was a key.
And like it was a super key level, right? It was a super key level. But at the time, the market conditions we were in down here, very similar to right now, right? Dumping, fear. I took this trade. I could have closed it all out after like a 1, 2, 3% move. I held this trade and I took profits up here. And, obviously I did. I took profits super early, like just like I did right now, super early, right? But then I held that thing after my stop loss was at my entry. And I was able to actually take profits at this. And then I continued to hold the trade until it got stopped out at the entry. Because it's like, I don't know, maybe we're going to get into an uptrend that will continue. Because we officially did put in a higher high, a higher low, a higher high. I'm thinking maybe we'll get a relief rally up to like 57K. I don't know.
Yeah. So I think there's one question that's sort of pressing quite a few people in the audience. It's so are your stop losses predetermined? Like as soon as you're executing on your trade, do you like set in your stop loss while you're executing, and then the take profit is more of you do it on discretion? Like how do you handle your stop losses and your take profits? The stop loss especially, I think a lot of people have questions on the stop loss. Is that predetermined? Do you like set it as soon as you execute?
So I'm supposed to say that you put the stop loss below the last low or the last high. That's what I'm supposed to say. Honestly, I don't really use stop losses, or if I do, I make them as low as possible to give the trade breathing room. But what I do is I use leverage to my advantage. Basically, I will use very high leverage in these trades. Like the trade I'm in right now, 70x leverage, super degen level leverage, right? But the reason I do that is because if my hypothesis for entering the trade is we're going to bounce off this very specific level, then a 70x leverage is basically giving me, because they'll liquidate you before your actual liquidation price, that's giving me like a 1% play room, right? 1%. That means price could come all the way down like another, $200, and I'm still going to be in the trade. So I don't really use that stop loss, but I'm leveraging up a very small portion of my capital. So if I do get liquidated, the liquidation is acting as the stop loss. And the reason I do this also, again, is for the psychology of it. It's like it's for the psychology of the trade, because when I use low leverage to scalp like this, there is so much of a temptation to say, okay, I'm going to give myself like a 0.25% stop loss, right? Inevitably, if you give yourself that set stop loss, what's price going to do? It's going to wick down into your stop loss and then pump. So, and that happens so many times. So I'm like, all right, I'm going to give this enough playing room. I don't have to think about a stop loss because the liquidation price itself is going to prevent me from losing too much capital. And it also prevents the temptation for me to say, oh, I'm going to move my stop loss down a little bit, because I think this is still going to come up. And then it comes down more, and I'm like, let me just move the stop loss just a little bit more. And then the next thing you know, you're losing so much money on this trade, as opposed to if this trade that I enter here we just fell through and I get liquidated. Yeah, it sucks, but there's almost like a feeling of relief after, of like, okay, I took a loss. All right,
Yeah.
let me go outside and like do something else, you know, as opposed to playing that psychological game with yourself all day, which I've done so many times, like in the past, like
I think
all
that's
day
how we
you,
all start. right?
That's how we
It's
all
just
go
like,
through that pain, because when we set, everyone talks about, I'm gonna lose only 2% of my account on this trade.
Yeah.
But as soon as you move, that exit criteria even a tad bit low, now from 2%, right? Oh, it's a 4%, right? But when you have determined your position size based on 2%, and now you take a 4% loss, you've doubled your entire loss, and that's significant, especially when you're trading leverage. So there's one thing you have no room on, no wiggle room on, is on your exit. And that's what he means by he is using leverage and his liquidation, etc., to help him psychologically stick to his discipline.
Right. So now, just for the audience, I think I'm assuming, I guess that's how you're doing it, is that you're using sub accounts, right?
Isolation.
You're isolating your margin. Right?
Oh
yeah.
yeah,
So that's how it's
isolated.
done, guys, by the way.
For sure, I never use cross. I use isolated.
Isolated.
So this
Isolate.
is another
So here's the
example
thing,
of
like
how we are on opposite ends of the spectrum, because we use only cross.
Yeah. Well, here's how you have to look at it, right? And here's how I look at it. Like, let's say you have $1,000 of capital, right? You could, and let's say your rule is you're only going to risk 1% of your account, right? You could put 100% of your account on every trade with 1x leverage.
Yeah.
And, or let's be real. Like, honestly, you could probably use 2, 3, even 5x, and it's super safe. But then it's like, you are exposing yourself to more risk for the simple fact, in my experience, that it's a psychological reason that you're exposing yourself to risk, as opposed to you're saying, okay, I have $1,000, I'm going to take $10 of this 1,000 and leverage it up really high so that I can put, let's say you're using 2x leverage. Let's say you're using like 50x leverage, right? 50x leverage, and you're going to put like, let's say 2% of your account on the trade. That's as if you're putting your whole account on the trade, but if you get liquidated, you're only losing 2%. And if you have a stop loss, let's say a tight stop loss, you could make it so you're only losing 1%, and you're still putting like your whole account on the trade. It just, for psychological reasons, you're saying, okay, I've already predetermined this tiny amount of money that I'm going to isolate and risk.
Yeah.
And
so guys,
but you have to be good. You have to be good. Like, here's the thing. I would not recommend this to somebody who's not good at technical analysis, because how would I have gotten to a 70x leverage trade from right here unless I knew that this specific level was probably going to give a reaction, right? I mean, this is not something you can do if you're not really good at the analysis, because then you will get wrecked. If you have a zone, like a big zone that's like 3%, and you're like, yeah, I think we'll bounce from this zone. If you use 70x leverage, you're going to lose all your money. This is for like precise moves,
and you lose it through death by 1,000 cuts too, right? Because you keep losing that $10, that $10, that $10, that $10, because people are honestly just constantly putting on the trade, gambling at that point without the dice loaded in their favor. Like you mentioned at the beginning of this conversation, you want to load the dice in your favor. So guys, what Jason is doing essentially by putting on the high leverage and allowing a liquidation point is essentially limiting his loss and preventing his psychological hurdles from allowing himself to move his stop loss lower and lower and lower, because he has a sub account with only $1,000 in it, right? So that's his loss. That's it. He's going to get liquidated. Nothing more than that. He has a rule though to not refill the account with more margin, more collateral, and move his stop loss down. And I'm pretty sure, Jason, you've come across people who probably do just that, right? They're not willing to take that loss.
Yeah. Oh, I know people who have lost like tens of millions of dollars in one trade because they didn't take the loss and they kept adding margin, and eventually they ended up getting liquidated back in March, like that the big dump in 2021 in the springtime.
So let's talk about that a little bit. Actually, do you have any what was your biggest learning from that event? Not just you as a trader, right? Because me specifically, I was able to learn a lot by watching, because we were well positioned during that event. We essentially did not have any leverage trades other than some options trades open. We did not have any leverage trades. I was able to like watch around and really learn from the market. Did you have any of those experiences where you were able to pick up something from other people?
Well, definitely hearing other people's stories makes me want to take things more seriously, like take risk management more seriously and stuff like that. But I can't necessarily say that there's something specific that I'd learned.
Are there any like parallels that you could draw from the current market situation to that market situation? Like, let's talk about specifically about the current market price, right? Do you think that we are currently going through a COVID-like scenario where you could see a similar capitulation? Because I think everyone wants
I
to know
think
that.
so.
Everyone wants it. Yeah, you think so?
I do. I mean, okay, so obviously we can't know, and so I'm gonna basically just tell you that I don't know.
Yeah.
But the two ways I can see this playing out is that we don't go as low as everyone thinks, or we go way lower than everyone thinks.
Yeah.
So I think we're either not going to hit
14K.
20K,
Or 14K.
or like lower than 14K. I wouldn't be surprised. Yeah, I have limit orders on spot at like 6K and 3K, because here's the thing, like, who knows if we might wick that? Like, who knows?
Yeah.
Like, we don't know.
There's no,
And it would catch
nothing
everybody off guard. Yeah, it would catch everybody off guard. Like, I mean, and here's the thing: just 2 years ago, we had a $3,000 Bitcoin. I mean, people forget this is unlike anything we've ever seen in human history, where we have an asset in the course of a year go from $3,000 to $65,000. That's insane. So even right now, a $23,000 Bitcoin, I mean, if you bought in March 2020, you're up massively on your initial investment, right? So it's like people forget that it went up so high, and the truth is, like they say, the fair value of Bitcoin based on the proof of work is like 15 grand.
That's bullshit.
Yeah,
Fair value is what the market decides the fair value is, man. That's the fair value.
Right. And massive capitulation, and who knows what's going to happen with with just the world economy in general.
Yeah.
Like if there's some kind of like black swan event, like COVID,
And that's what I've been that's what I was telling people to keep an eye on. Like, I'm just quickly like gonna show people who are watching what to keep an eye on at the moment, because Jason, I'm looking at the HYG chart. This is something that you can keep an eye on as well. Look at the weekly time frame, and it's essentially HYG is the ticker. It's essentially the high yield corporate bond index. And if this starts breaking, man, it could cause a dislocation across all markets, including crypto, including everything. And yeah, that's what I'm a tad bit worried about, because that's what could cause that 6K bid of yours to fill, right? It's going to correct the entire market.
Yeah.
Right.
That's going to be
this
that
is the
risk.
This is the corporate bond market, the
Oh,
high yield
interesting,
corporate bond market. Because think about this, dude. We just got a really, really bad print on CPI on Friday. All right, that's already going to spook the Fed. Now, apparently, someone mentioned in the YouTube comment, in the YouTube chat as well, that the mortgage-backed security market also had a no bid event. So that's scary on its own. Now, if we start seeing the corporate bond, so basically, right, a lot of these corporations, they are living paycheck to paycheck, where they are relying on being able to roll over their bonds to get funding, to refinance their bonds, to be able to make payroll, to be able to pay their employees. They are relying on the ability to actually refinance that. But if these yields get too high, if those corporate bonds sell off and those yields get too high, they have to pay higher and higher interest to refinance. At one point, they're just going to say, F it, we're going to call bankruptcy, right?
Yeah.
And that's going to cause a cascade of events, dude. And that's what will cause the Fed to step in. And until the Fed actually stepping in, what's going on right now, dude, is everyone staying away from the markets until the market breaks, which is almost like a self-fulfilling prophecy. So,
yeah, that's very true.
Jesus, it's. I'll tell you guys this though. Kusha, what do you think? Do you think Jason's right in that we could have a COVID-like event?
I'm not sure, because the thing is that there's an expectation, right? For as long as there's an expectation, I don't think it's going to be a COVID-like event. I think it's going to be more of something that would happen with the corporate bonds or something, and it'll be like a round off. I don't think the Fed will have to sort of step in full throttle with something they're not expecting. I think everything that's happening right now, the market is expecting it, the Fed is expecting it, and people are preparing. They're even forward pricing in a way, right? So I'm not sure if it's going to be a COVID-like event, but there could be like a capitulation. I think that's going to be more to do with, I mean, collateral is dying in front of our eyes right now across the board. There's literally no safe asset. Like literally everything is dumping.
The dollar is the safe asset.
Right. So and that's the thing. I don't think I think people are expecting something, and for as long as they're expecting it, I don't think it's going to be a COVID-like event. COVID was very unexpected what happened there, right?
COVID, because I was talking to some funds, etc. during the period as well, and they were bidding 6K, Kusha. They were bidding 6K hardcore. The difference, I think, between depends. It depends whether people bid 20K, right? What causes a massive event down to like 3K or 6K in this scenario, 10K, whatever it comes down to, what causes that kind of event are forced sellers, right?
Yeah.
If somehow, for example, Michael Saylor is really forced to sell, and then other people are literally forced to sell because they bid 20K, right? And that forced liquidation of people's confidence is what causes that slip.
Yeah.
Like, do we have that confidence in the market right now, Jason? Do you think that confidence exists?
No.
That's what I'm not seeing. That we need confidence to get that wick, dude.
Yeah, I guess that's true. It is. I appreciate what you said, Krisha. You're right. Like everyone's expecting the worst, so then we probably won't get that COVID-like event, which caught everyone off guard. I was even thinking, it is very interesting how even like mainstream media outlets are telling everybody, yeah, it's going to be bad. Like, gas prices are going to keep going up. Like, there's going to be like shortages and all this, which is weird for me because typically, even if those things are obvious in the past, they don't tell you, right? They just kind of like wait for it to happen and then like, oh, what a surprise. We didn't know. Like, like, but now like they're honestly like, it's weird. And that makes me think like, why are they telling us this? Like, that means it's either going to be really bad or maybe it's not going to be bad. Because typically they like, when everything's going great, like back in 2006, all like the financial advisors are saying, oh yeah, now this is a great market, it's time to get in. And then like 2007, 2008 happens and it's like, oh wow, no one could have seen this coming.
Yeah.
And they left everyone holding the bags. But now it's like they're kind of preparing people. So I don't know, maybe there's something else that's going to happen. Maybe everything's going to pump like crazy and it'll catch everyone off guard. I don't know.
That's what will be the big surprise. That in my opinion could really be the Max Payne scenario, right? And it could of course we are Bitcoiners here and we are feeling we want it to happen with Bitcoin, but just think about what's happening with the Bitcoin dominance chart as well. All coins have been completely getting wrecked, and Bitcoin really hasn't had its time for 2 years now. Well, yeah, since 2021 it's done nothing.
Yeah.
It's done nothing. So
yeah, we've just been ranging.
Yeah, like and even let's look at ETFs or like ARK, for example. Kathy Wood has been getting pummeled. Like her entire reputation is like down in the gutters at the moment. Like just those kind of contrarian plays could really be the Max Payne plays, because people probably have massive short positions opened on all of those trades, and that could be the Max Payne, right? People's shorts just getting blown through. Bear market rallies, man. We haven't seen a real bear market rally in a very long time. People have forgotten what bear market rallies can be like.
Yeah, all of a sudden everyone's like, yeah, we're back in the bull market.
Yeah. So what's the popular sentiment that you're seeing, Jason, in terms of where do people expect the lows to come in at? So at Mango, I mean, it's I think around that 20K region, 21, 22.
What's your community saying?
So what's your community saying about the lows? Like, what are people expecting?
Yeah, probably about that. I mean, for me, like...
he doesn't care. Jason doesn't care. Because
Well,
what I think about the way I see the most advantageous thing about Jason's trading style, guys, is that every impulsive move is followed by a range, and he's going to trade that range.
Yeah.
He's going to find that range. So, Krisha, you asked the question: what time frame does he trade? Jason, tell me if I'm understanding this correct. It doesn't matter to you what the time frame is, or you don't have a particular time frame, because your job is just to find the range. That range might be in the 15-minute, the 1 hour, and you'll trade it, support and resistance, constantly. No matter where price is.
Yeah.
Whether it's 50K or 5,000, you're trading the same way.
yeah, and I often forget what the price of Bitcoin is anyway.
There you
Like
go.
I always forget. Like people are like, "What is
Yeah.
Bitcoin today?" Like my friends that know I'm into. I'm like, I don't know, because I'm not really looking at the price. I'm just
Yeah.
looking for the next. Like I know it's coming to the golden pocket,
yeah.
like fib retracement, but I don't know. Like is it 30,000 right now? Oh, I didn't know. Like, because
Yeah.
people who know I trade, like my in-laws and stuff. Every time like something happens, market dumps, they're like, are you guys okay? Like
You guys okay? Yeah.
like.
I trade both directions, mom.
People they're like, so how's that Bitcoin going for you?
Yeah, how's that Bitcoin?
Pretty good. Like, but if people don't understand that,
Oh my god, we go
So-
through the same thing. It's good to know that we're not the only ones in that boat.
Krisha, you
Yeah.
often say, be price agnostic. Be price
Yeah,
agnostic.
yeah, you
right?
have
Krisha,
to.
because Krisha trades support and resistance too.
nice. You
be it
use
on the
that
high
term,
time frame.
price agnostic.
Yeah, that's her favorite term. Price
That's so
agnostic.
funny. I always use that term too. I say I'm agnostic about. That's funny. I like that.
I think you embody that term a lot more than I do. For me, it's just like the broader scheme of things. I'm just like, you gotta be price agnostic. I mean, this is Bitcoin that we're talking about here. This is like a freaking financial revolution, not to sound like a broken record, but it totally is. The more you look into it, it blows my freaking mind that Bitcoin is actually sitting at these levels right now. It's ridiculous.
You mean in a way that it presents opportunity, or in a way that like?
Opportunity.
What do you mean?
Of course.
Oh,
like
yeah,
it's
for
it's
sure.
it's a brand new innovation, and just everything that's being built on top of it right now on a macro standpoint. I mean, this is a bloody discount. It is an insane discount on Bitcoin. And I was actually looking at traditional versus Bitcoin a couple of weeks ago, and I was surprised to find that if you go back to the COVID rally, where traditional rallied, hell, freaking bankrupt companies were going to all-time highs, and while crypto was also rallying, it was all happening together. But I found it like really, really interesting how so many traditional companies outpaced Bitcoin in that pump. Like Bitcoin's pump was
Bitcoin
pretty
didn't.
freaking lackluster if you have to sort of compare it. And just looking at that and looking at the innovation, if you sort of really pit them against each other, like it's insane to see that Bitcoin actually underperformed in that sense.
Jason, you trade the
That's very
altcoins too,
interesting.
right? Do you
not
trade
as much
altcoins in
anymore.
any? Oh, you don't trade them as much. You've been trading Bitcoin primarily during the bear market.
In the summertime, man, it's like I am just because I'm a homesteader, so I grow my own food and all that, and it's my bread and butter is Bitcoin, like because I know like where all the levels are and all that stuff. It's just like altcoins. I do trade them in the wintertime, and I've had some epic altcoin longs and shorts during this whole cycle, but I'm primarily like, I'm not as in it as some other people. Like I'm just I'm just
do you
doing
think
it
they trade
to.
differently? Do you think they trade differently with support and resistance, or do you? Or could you use the same? Could the audience use the same techniques?
Yes, I mean every altcoin trade I've taken has pretty much been the same technique. Besides, in 2020 and 2021, I was basically just looking for, do we have a triangle? All right, let's long it when it breaks out, honestly.
Yeah.
Because there's a time and a place for that, right? There really is.
Yeah.
In the
Totally
right
agree
market
with that.
environments.
Yeah.
But yeah, in general, I'm looking for those key areas of confluence. Like I was able to short XRP from like to the dollar high, and like same with SOL. And I was able to long Cardano when I thought it was the bottom, which actually turned out to be a good trade, but then stopped out at the entry. But everything applies the same. I'm just looking for confluence. And once you have the levels marked, I mean, there's infinite opportunities to take scalp trades. I mean, even like look at this. Like we got the first touch of the level with the bullish divergence, took a scalp trade. Got the second touch, put in a lower low, put in a bullish divergence. You could take another scalp from it.
Yeah.
So I did. I took another scalp from it right here. And
Can
same
literally
deal.
put on the same trade
Stop
over
loss
and
at
over
entry.
again. Yeah.
What was that?
I said people forget that you can literally put on the same trade over and over again. Support is support until support works, breaks.
Yeah, and it's even, you could divide this up into a range and say, all right, look, now we're trading this little range here, like support, resistance, and honestly, this probably could have been a good area to take a short from, but I didn't have confirmations for a short there, and also I wasn't in the mindset for sure. Maybe I did have had confirmations, but you could just see clearly, like, okay, we have, like, even on the 1 minute time frame, like we have an order block right here, and we have this clear support resistance flip right here, right? Support, and then now we come into it again. It's acting perfectly as resistance. It's the same as trading those huge ranges, but you can do it on a very low time frame.
Yep.
And I'm actually curious to see if we did have any kind of bearish signs as we came up to that area.
What time frame were you looking at over there at the moment?
Right now, this is the 1 minute.
That's the 1 minute.
But you have to understand the context. I'm not coming to the 1 minute and saying, do we have a bullish divergence this long? No. It's like, this is a naked weekly point of control, which means, going all the way back from, I don't know, last year for a whole week, this was a very high volume node, which means there's liquidity here and there's a high chance that we're going to get a reaction at this level, right? And so pretty much all of these little areas where we have these little bounces on the way down, these were levels to some capacity, right? I mean, these were levels to some capacity. Like yesterday, that crazy pump that we got right here, it doesn't seem so crazy now in hindsight on the 1 hour time frame.
Yeah.
But that was a 5% move yesterday right here. We came down to a key level. And shout out to Boyan, one of the guys in my Discord. He marked this level out and gave it to us. And look at that. I mean, right from the little whoop, I was able to get into a juicy long from it.
I think that was so it's like 200 EMA as well, eh? So it seems like, Jason, you do use the higher time frames, but you zoom in on the lower time frames. It's like, it just seems invisible to the traders who are watching superficially, but you're finding these key levels based on what's been happening historically, at the very least. Maybe we don't use higher time frame levels as the term, but mentally, because you're trading this every single day, that, hey, this is a key level and has been a key level for 2 weeks now, right? And that 2 week level could literally be the weekly 200 exponential moving average. But it doesn't matter if it is what it is to you. All that matters to you is that you've identified that it is a key level, right? Now, people may not see that, so I want you guys listening over here at Mango, guys, to really, really zone in what Jason said, that you got to put into context. He's not trading the 1 minute time frame blindly. He's actually keeping historical context at the back of his mind, right, Jason?
Yeah, absolutely. And like, we could this level right here at about 28.6, this was literally the 618 from the Corona dump to the all-time high, and look at how many times it acted as support. And I traded this level many times, and I knew it was the macro 618, but there were many other reasons as to why I was able to take longs from this support many times, because it always gave us some other kind of confluence where it was and we could just see, like, so many times, even like things are looking more and more bullish as we trade this sideways range. Like, it's literally sideways, but everything on the oscillators here are bullish. So there's just so much. And check out the video, like how to scalp low time frames. I posted this a few days ago. Like, this literally walks you through, like, the process that I go through of, like, identifying levels and, like, how I'm able to get the entries so on point, because this is how I scalp the 1 minute time frame, but I'm not just using the 1 minute time frame. Like, I'm understanding the entire context of the market, and that's so important to be able to understand the context. Otherwise, you're gonna get wrecked and stuff.
Yeah. I think that's really important, Jason. I'm so glad that you emphasized on that.
There was one thing. So I think I'm sort of intrigued. Is there ever a time where you're looking at your lower time frames and you're trying to identify a range of sorts, and because of the volatility, there's no range for now in that instance? So what do you do in that instance? Because a lot of people, they find this need to always be in a trade, So is there ever a time where you're just like, all right, you know what, there's no range to be identified, and so I'm going to sit this one out until a range sort of comes to play, and then I'm in, like, is there that sort of time?
Absolutely. I mean, you know, even I will advise, you know, non-financially, of course, in my Discord that, you know, if we're just dumping someday, right, and we're just losing supports, like don't even take a trade, just wait for a range to form. And so there's two ways that I like will approach it. Number one is I will be looking for levels to the downside that I know already are supports. Because, you know, we could say that throughout the entire year of 2021, although we had many small ranges, this was one giant range between 30K and 65K, right? So there's always going to be ranges within ranges and levels below and above that we can look for trades. But in general, like I'll never forget this right here on December, I think 3rd or 4th, you know, we had this massive dump to the downside. And it was right before a weekend. I'm like, whatever, I'm not going to trade it. I did not take a trade until we came down to the Fibonacci golden pocket retracement, um, which was, let's see, what was that? Which was right here. Okay, then I was able to get into a trade from right here. And I forget, I'm actually forgetting the exact levels, right? Because it's in hindsight now. But I know for certain I was able to grab a nice long trade from somewhere. Let me see, actually. Was it? Aha, yes. This was it. So, like, we dumped on December 3rd, right? And then I took a long trade on December 6th. So I waited 3 days because it took 3 days for basically this entire thing to start forming here, where now I have, like, a Fibonacci retracement level to take a long from, right? And then once we got that first move to the upside, then I'm pretty sure I had a fib pulled from here to here. Yeah, look at that. So I was able to take a short now from the Fibonacci golden pocket up here. So, you know, just sit out and wait for that market structure to happen. Once you have a level, like we had right here, I took a long from here, I took a short from here, and then this is now establishing the range for us that I'm looking to trade, where I know now, okay, from the first long I took, this is general support. From the first short I took, this is general resistance. I was able to get into a long trade from right down here because we put in a lower low with a bullish divergence. This trade up here, pretty epic. I took this one as well, and it was one of those epic ones, right? And we had to set up in advance. That's another thing. Like, you know, you always have to think one step ahead of the market. So, like, this level right up here was a very key level because there was so much liquidity up here from these highs that I knew, like, okay, if we come above that and we get what we did get here on this is the 4-hour time frame, we had bearish divergence, like, you know, it could be a massive move. So I was able to grab a short from 52K and I held it for a very long time. I'm out of it right now, but that just happened to be that running trade, right? It's like, that's the thing, like, break even, small win, small loss, break even,
and then the big win.
And then eventually you're going to short the top of the local range, which just so happens to be the top of a massive breakdown. You know, and that was a massive trade for me, like a massive trade for me. You know, that's those are the ones
I think they miss the fact that you're putting on the trade over and over and over again. You're taking every single trade because you don't know which one's going to be the next win. You know, the big win at the very least, right? It's just about taking the losses, taking the next trade, taking the loss, taking the next trade, taking the break even, taking the next trade, taking the win, and taking the next trade, taking the next trade, and boom, big win, right? But if you don't keep taking every single trade, as soon as you do give up, right, mentally, and you're like, fuck this, I can't do this anymore, that's the next one is going to be the one that you should have taken and you miss it. So
yeah, exactly. Yeah, like we're pumping right now, and you know,
so Jason,
that's a pretty good entry right there. That's a pretty good entry.
Really good entry.
Good trade, man. Good trade. Let me zoom into my charts. Actually, I can't see my chart.
And it's because the level, you know, the level was predetermined and the confirmations were predetermined. And now, you know, look, this is my third trade during our conversation here.
Yeah, he's taking 3 trades during our conversation alone.
That's insane. Yeah. By the way, that requires like some insane execution skills, because you're multitasking there, you're trading the lower time frames, but notice how it's the discipline and it's the pre-planning, and he understands that, okay, there's a range that he's identified and he's doing it based on that. But also, risk management is a key aspect to your system, right?
Yeah, for certain, risk management is absolutely key. So, like, you know, I've taken profits. I moved my stop loss to my entry, which I'm just going to make sure because that was weird. So, Yeah, so even on all these trades, guys, I'm not risking more than I'm willing to lose. Like 1% of the capital I have allotted for myself to trade. It's like I'm not risking more than that. I know if I get liquidated on this trade, it's not going to set me back. And
Yeah.
like number one is do not lose money. Like preservation of capital is everything. It's everything,
Yes.
you know?
Yes.
So,
I
and
have a
actually,
question
just so
regarding
you guys
your.
know,
Go on.
I am going to have to head out in maybe like 5 or 10 minutes because I
Yeah,
have
yeah.
I have a VIP Bitcoin stream in like 15 minutes. But yeah, go ahead. What were you saying?
Does your trading, like, do you depending on whether it's a bull market or a bear market, do you give any sort of trade more of a win rate, like a better rate to win?
Oh,
Does your trading style sort of change slightly? Do you give
no.
your longs a bit more thing than your shorts?
No, basically what I do is I'm looking for the range, and if I see that we're at the very high of the range, I will TP1 after a 1% move, stop loss to entry. If we're just if I'm scalping, I'll TP1 after like a 0.3%. And typically, if we're just trading a normal range, like right now, like I TP real early for this because I don't know, like look at what's been happening. And I'm counter trend scalping 70x degen leverage over here. But my typical go-to is I'll take like 25 to 50% of the trade out after a 0.5% move stop loss to entry, because typically what that does is, you know, everyone's trading with different amounts of capital, but if you're guaranteeing not a loss and then letting the rest run, then it, like, again, it takes all the thinking out of it. Like I don't have to sit there and think, okay, what's a risk to reward ratio here? Like, um, should my target be to make sure this trade is worth it for me? It's like, no, like I know if I'm going to get liquidated, I'm only losing 1%. And because I know that I'm only taking trades off key levels that have a really high chance of getting some reaction, I don't think about the risk to reward. Like, I mean, the thing is, this is a key level here. I know there's a high chance we're going to get some kind of move from here, right? And so I'm not typically thinking about risk to reward, but it's built into my strategy because all things considered, if I have a key level and I have confirmations, it's high probable that we're going to get that move, So if you're just using good risk management and blindly rolling the dice, you could probably lose money that way. But we're not loading the dice. I mean, we are loading the dice, right? We're loading the dice. So I know a lot of people are real big on risk to reward. I am too if I'm thinking about potential swing trades. But if I'm scalping like this, it's pretty much like I don't know. Like the mentality is more of like when you like stick your hand in the fire real quick and it doesn't hurt.
Yeah.
That's a good analogy.
Okay, so Jason, before you go, I have one last question for you. If there was one or two pieces of advice that you could give traders, right, who are starting off in this journey, what would it be? You can take some time to think about it if you want to, but this that one or two piece of advice that could really get their mind straight.
Yeah. First of all, have a strategy. Second of all, have a trading strategy, first of all. Second of all, have a risk management plan. And third of all, make a covenant with yourself that you will stick to your plan. And if you do those three things, I can guarantee you're not going to blow your account. Like there's 0% chance you will blow your account if you have a strategy that you've back tested and say, I know this has a 7 out of 10 win rate. I back tested this, and maybe even forward tested it. And then okay, even if I take a loss, I'm not gonna lose more than what's good, enough that will set me back, right? And then having that discipline where you're not gonna chase price, you're not gonna FOMO in, you're not going to take a trade that you shouldn't take, because that's really where the losses come in, and that's where most people struggle. That's where I've struggled the most, right? We're all good at TA. We can look at support and resistance. We can look back in hindsight and say, oh, what a great opportunity that was. But in the moment, if price is pumping and you're feeling that FOMO, you might just long the top and get wrecked, even though you had a plan for the day that would have turned out really well if you had just been patient and disciplined.
Yep. Really well said.
Boom.
That was such a strong way to finish off, Jason. It was honestly such a pleasure having you here. I'm looking forward to having you here at least once a month, man.
Yeah, that'll be cool.
This is we could do this like you mentioned too. You had an idea of doing this bi-weekly. I think the audience is gonna love it too. They can learn a lot
Yeah.
from you. Could you tell the audience where they can find your YouTube channel, if you do have a Twitter account, etc., any socials where they could find you?
Yeah, so my YouTube channel is Jason Casper, and my Twitter is at Jason_Casper. And yeah, make sure to subscribe to the channel, guys. I'm so close to 80,000 subs. That's
Yeah.
crazy. But
Yeah,
That's awesome.
let's get Jason to 80,000, guys. He's almost there, and make sure to follow him on Twitter too.
thanks for having me on, guys.
Dude. Anytime, man. Anytime. We should
pleasure.
do
This
that.
And
is
tomorrow, you
great.
guys will be on my channel tomorrow?
Yeah.
Yes.
Kusha, you joining me?
Yes.
Yeah.
Cool,
I'll be
cool.
here for.
We'll just have a casual
Awesome.
conversation, man. It'll be fun.
I know my audience will really appreciate your stress-free style as well as why. I'm excited for it.
That's awesome.
It's gonna be fun, man. Today was like a crazy day for the markets. I really appreciate you taking the time to actually show up, even though you had to put on trades, etc. This was amazing, and a shout out to Dread Mining,
Yes.
who actually
Yeah,
had
Dread
a,
Mining.
had a,
Thanks,
had a
Dread
role in
Mining.
like putting this together. So, great stuff, Jason. I don't want to keep you here any longer. I know you have to get back to your community, who's probably waiting for you. If you have any final thoughts, feel free to share, man. If not, I'll see you in tomorrow's
yeah.
stream.
I'm good, but thank you guys. God bless,
All
and
right.
yeah, we'll be in touch.
Yeah.
Cheers,
Ciao,
Jason.
Jason.
Ciao.
All right, peace, y'all.
Alrighty.
All right.
Krisha, what were your takeaways from that?
There's a lot to learn. I mean, it's a different game, right? When it comes to playing these lower time frame ranges, and it does require a lot more discipline, guys. And for those of you who want that active sort of trading, well, if you want active trading, it's basically Jason. I think he broke it down very well, and I really liked his end. What he said at the end, the tips that he gave you guys. If you guys have to rewind and go and listen to that once again, do that, because that's not only for scalpers. That's even for trend traders. It's the same system. It's that same sort of rule set that you need to follow to be a successful trader either way, right? So yeah, I think that was great advice. Any closing thoughts? Bitcoin on the dump. Guys, remember the level? 200 simple moving average on the weekly time frame, coming in at $22,000. That is the main next target. Sean, we closed a 12-hour during that amazing session.
Yeah. I'm literally looking at just that. The 200 moving average is still ways off at around $22,000-ish. We've not really tapped the bottom of that yet. Kusha, do you think I think we're coming back. I think we're gonna see that. I think this is coming back down here to 22,000. We are seeing a small bounce over here at the moment, but I don't know how far this is gonna go.
I think it's a test. This
the
is so the
is-
level that I'm looking at right now as that major point of resistance, and I think we're testing that right now. And look at the play on the dynamic, the mango dynamic. The key level that I'm looking at is about $24,000. If we get rejected on that in the next couple of 4-hour closes, I'm saying that we come down to give 22K the test. $22,000 is the next main target on the chart, guys. Weekly 200. Do not forget the historical significance on that.
Again, let's just quickly go through a few key charts that we need to keep an eye on. Again, guys, I remember the beginning stream what we did talk about in terms of long-term accumulation, long-term goals, etc. We are sitting on some major levels. We'll talk about what these levels are, what these EMAs are in tomorrow's stream. So if you guys haven't subscribed and hit the notification icon yet, make sure to do, because we have some exciting things to talk about. Kusha is going to give you guys a rundown on her PMI indicator as well, or rather what she found on the PMI and how it's all lining up over here. I do think that this is going to be a massive accumulation range, Kusha, between the zone, unless we do see a massive capitulation event and we close underneath this zone. Closing under this zone is going to be really ugly for Bitcoin. Okay, this is the high level structure that we're looking for Bitcoin to hold moving into the 2024 halving now. Okay, right, we're talking about much longer targets.
Yeah.
Okay. Going back on over to the charts over here. For Bitcoin, on the weekly, you're looking for the weekly 200 moving average.
Yes.
22,000 is the bottom of the range over here.
Yeah.
Okay. To wrap up, we want to keep an eye on what's going on with the 10-year. It's breaking out as we speak. This is not looking good for risk assets. We've made a new high officially. Let's look at the monthly. What's going on over here? Yeah, if this starts closing about this zone over here, guys, around 3.2%ish, we're looking at, yeah, this is going to get to around 4%. 4% yields on the 10-year is going to put a lot of pressure on risk assets. So be very careful. Keep an eye on this. HYG is again not the most confidence inspiring either. Like this breaking down over here, this is an official breakdown. We've put in a new low, right? So this downtrend is getting aggressive. So 10 years looking ugly, HYG looking ugly, Dixie 2 is on a run at the moment. Not put in a high yet, but if it does, looking for continuation. Already looking like it wants to see continuation. Anything else you want to look at? Let's look at oil real quick. US oil, seeing some pressure at the moment. So yeah, thoughts or wrap up? We've been doing this stream for 3 hours now, guys. 3 freaking hours.
Of course we'll be back tomorrow. Yeah. But if you guys like this, if you guys like the collab with Jason Casper, make sure to hit the likes. Go give Jason a follow, especially for those of you who really like trading lower time frames. I know that many of you, we actually had a question that we had asked in one of the previous live streams, and it appears that a lot of you want to be trading this range. So definitely give him a follow if you guys are looking for more golden nuggets. And yeah, don't forget to hit the likes when you're signing out from here. And we shall see you all tomorrow. We're going to be going over the macro bull market signs, the macro reversal signs. So make sure to tune in, okay? Because this is the time where you want to be paying attention. This is the time where the money is made. Let's go, Sean.
Let's go.
All right.
With that,
trade safely, trade stress-free, trade the mango way, trade the easy way. We'll catch you tomorrow. Ciao, you guys.